All right. Hello, everybody. Welcome to the Robinhood Q4 2025 earnings live. We are here, myself, Roy, Tanner, and Neil. Thank you, everybody, for being here. We got a lot to talk about, a lot to get into as we get into these earnings. Roy, how you doing?
Good, man. Always excited for these. We know that they're going to put up really good numbers because of monthly stuff, but the stocks headed the other way, so it'll be interesting just to see how this ends up turning up. But good to be with you guys.
Yeah, I'm very excited. Tanner, how are you? Obviously, Hood, as Roy mentioned, is down 25% year to date. This thing has basically been chopped in half from the 150 highs. I think last time we met, it was around 110. How are you doing and how are you thinking about the stock?
Doing well. Markets are starting to look better for some of our core positions. Now, Hood's still very much down, but we were long-term holders. I mean, this is what stopped me from selling at like 150, for example, is like I think we all kind of knew it was very extended, but would you want to sell out of a name that you believe is going to be much higher into the future? So I find this very hard to time this sort of thing, but picking the companies that are going to be with us for long periods of time, I think Hood is definitely one of those. And I think what cemented that is actually what happened today. I don't know if you've been seeing in the chat, and maybe people can let us know, but there's been a big push in Robinhood banking today. I think a lot of people got their invites today. So, if more people end up downloading that and getting the credit cards and prediction markets, it all diversifies away from crypto and the equity markets, and maybe flattens out some of that volatility and just makes them a better compounder over time.
Yeah, I agree. And I think, part of the reason a lot of us have held through the volatility, which again, the volatility will take you up, the volatility will take you down. Unfortunately, Robinhood was the best performing stock in the S&P 500 last year, and now it's one of the worst ones. And that's the nature of being a long-term investor and also being in a volatile stock. Neil has been covering Robinhood since it was like $7-8. I think recently he got a bit more excited on this pullback and bought the dip. So Neil, how are you? And what are you thinking for earnings today?
I'm doing well. I mean, Tanner and me, we were talking a couple of days ago, like the world was going to end. And since then, I think we've had 2 consecutive green days. Even today is not that bad. So doing well. With Robinhood, yeah, I'm officially back into the name because it's the company basically got cut in half. Since the peak, it followed Bitcoin's price action, which I think is a bit silly. Yes, it gets affected when the price of Bitcoin goes down, when the market goes down. Of course, Robinhood's business gets affected, but it has successfully diversified its business over the past 2.5 years or so. It will continue to diversify its business, which will make it a stronger company no matter where we are in the cycle. I think for the quarter that we're going to see today, and probably maybe they'll talk about some guidance, prediction markets are going to be such a tailwind for this company that, in my opinion, will erase any headwind that the crypto market or equity market put on this company. I think I've seen some numbers, some analyst expectations, 120 million or so, and then 400 million for the year. I think that is way too low. And we're only talking here about Robinhood/Kalshi, right? That partnership. But later this year, Robinhood will come out with their own product, which means they'll take the full fee instead of splitting it with Kalshi. They will still offer, I think they said they will still offer Kalshi alongside it. But if it stays legal and there are no political, shenanigans around the prediction markets, this could be $1 billion business for them in the near future for sure.
I think there's a real chance that this quarter we might actually see a bigger market for prediction markets than equities. This quarter, like we're not even talking into the future. So yeah, we'll see. By the way,
crazy.
Can I talk on these? Can I talk on these numbers really quick?
Yeah, go ahead.
I did my own numbers, completely unbiased by Wall Street, and got the exact same numbers.
Wow.
1.34 billion, 64 cents of EPS.
Yeah, Robinhood tends to come in line with expectations or a slight beat. So unless there's something we're not factoring in, again, we already have a lot of the monthly data. we're missing a couple of days, but maybe on gold subscribers, maybe prediction markets are a little bit better. They should come in line with those expectations. Now, they will be deaccelerating growth from 115% to 35%. So if you see the headline that says Robinhood deaccelerates, just remember that's priced in. That's what's supposed to happen. You don't grow at triple digits forever. But I mean, they're going to be growing pretty fast. And, you know, at 150, it was relatively expensive. Now it's trading at around a 35 PE for 35% growth. Not that crazy. And I think we could see some more momentum if they continue to beat those numbers as well. The other big news that was interesting today, if people didn't see this, is Schwab and Morgan Stanley took a big hit. This company named Altruist rolled out an AI tax planning feature for $60 per seat. It's kind of like Anthropic killing SaaS was the headline for fintech. Now, Hood didn't take that big of a dip because I think the market, I guess, assumed Hood would be less susceptible to this AI headwind versus a Schwab. But the fact that this headline actually took a company like Schwab down 7% on the day, I mean, quite incredible. Still down 7.5. Tanner, any thoughts on what you saw with this today?
I just don't know where this ends. Like, I think the thing that I'm just realizing is there's going to be a new AI company for every aspect in every business. And every time Claude Opus gets an upgrade or ChatGPT gets an upgrade, are we just going to have another software sell-off on fears that, you know, now the models are even stronger? Now there's a higher likelihood that a Salesforce or a, you know, potentially it bleeds into financial services and a Schwab, something like this ends up getting hurt. So I'm just worried that this might be sort of like a 5-year trend of model improvements, hurt traditional names over and over and over, regardless of what's happening on earnings.
Roy, any thoughts on how this played out today?
Yeah, I mean, it's typical market reaction, right? Usually the first reaction is more aggressive than it should be, whether it's to the upside or downside. And this is a case where, you know, Schwab, I mean, probably that's unjustified, just frankly. But, you know, it coming down just a little bit because of that. That's one thing. It's a little bit weird when you see narratives like we saw with Palantir and SaaS apparently getting eaten by AI. And for some reason, Palantir got caught up in that, which is like, wait, but they're the ones doing the disrupting. What's going on here? And Robinhood, kind of like that too. It didn't get caught up nearly as much as the other names there that you showed. But I mean, they are a company that we've seen the culture, we've seen the competency of these guys. Interesting. But yeah, they execute at a high level. They're implementing AI across the board. They're the disruptors. I'm not afraid of them being disrupted.
I agree. Neil, go ahead.
Yeah, no, I agree. I agree with Roy there, especially at the end. Look, with this thing, I can't wait for the headlines, right? So you can now vibe code a brokerage, right? I think these are the headlines that we should be expecting pretty soon. But no, I mean, we're talking here about companies with billions, hundreds of billions of dollars in assets under management, things like that, millions of users. You're not going to vibe code this in your house. This is not going to happen. Plus, if you can vibe code something, then what's stopping these companies to vibe code new tools for their existing users that they can monetize with a click of a button? So I agree with Tanner that this might be something that we're going to see for the next couple of quarters, maybe, who knows, maybe years. Every time there's a new upgrade or update, we're going to see some uncertainties, but it's up to these companies to show the market that, look, AI is a tailwind for us, not a headwind. This is how we're moving faster, etc., etc. Those that don't show it, then yeah, you're going to get crushed. But yeah, that's been happening before.
I don't think the market assumes that they won't also be using these tools. I just think that the market's worried that they sort of lose pricing power at that point, and that a lot of companies compete on price, and it actually sort of evens out the playing field a little bit. And so, you know, new entrants can enter into spaces much quicker, and you could see tools that might, I mean, we'll have to see, right? I think the market's maybe discounting how many revisions in code a Shopify or a Salesforce or some of these businesses have had over decades. And people are thinking that Shopify is going to get recoded in, you know, a year. It's just not going to happen. But it's still is painful to hold these stocks from, you know, Shopify 180 down to, well, it's starting to recover now because of some analyst upgrades, but, you know, 130 essentially. It's still a painful hit.
in terms of hood price, we got about 3 minutes until the earnings, actually about 8 minutes because the earnings are at 4:05. First of all, we have a bunch of other earnings: A-Lab, Cloudflare, Upstart, Zillow, Ford, Centrus Energy, and Lyft. So obviously we're going to listen to the hood call in an hour, but we're going to try to get you guys all the numbers. Look, the stock is down from 150 to 85, but it was at 68 last Thursday. I personally, my opinion, do not expect us, even if the print is horrible, to get back down to 68. I think that was a market bottom, at least short term, not a hood specific thing. I mean, you had Palantir 125, Nvidia almost at 169. So like everything took a hit that Thursday after hours. I do think, though, below 80 is possible if there's something the street doesn't like. If they took Microsoft down, if they took Amazon down, there's no reason they can't take hood down. However, I think a lot of the bad news is also priced in to an extent. Now, maybe I'm wrong about that, but I mean, the stock was at 120 in the beginning of the year. It's at 85. So it would not surprise me if we get a little bit of a bounce, even if it's a sympathy bounce. Any stabilization in the price, given that Bitcoin has at least started to stabilize above that 60K bottom that it had, hopefully keeps hood intact.
Yeah. Plus the way that it's been trading relative to crypto is kind of like the market thinking of Robinhood as its 2022 version, where a huge chunk of its earnings were impacted by crypto's downturn. That's a lot smaller piece of the pie. Now, they're still cyclical. They're just not hyper cyclical. They've built out a lot of $100 million annual run rate products. Now, a lot of those are tied to the market cycle too. But yeah, this is a very different company than it was in the prior cycle. And the market just, for whatever reason, it's not getting that. And over the short term, that's fine. Over the long term, I mean, I think that the fundamentals and the excellence of this company is going to win out.
Yeah, I agree. You do have the S&P taking a little bit of a dump into the close, 692 down a third. Hood is down about 1% into the close. Again, at 405, we should get the numbers. We'll see whatever numbers come out before Hood. But you also have the Trump accounts. Vlad might talk about that. The SpaceX IPO, that retail gets participation. I mean, there are a variety of different catalysts and obviously prediction markets. People have said retail activities peaked for the cycle. October was greater than all of Q3, if anyone remembers that. So, I mean, I do think, and January was pretty volatile. I know Robinhood stock didn't get treated like the high beta names that did get, like a 2x in a month, but a lot of the activity was happening on Hood. So in terms of the January data, that might also be a tailwind for the stock.
I think it was October was greater than all of Q3 for prediction markets. Not for all activity.
Correct. Not for all activity. Correct. But October did have all-time highs across options and equities. Correct. So October was a good month. That was part of Q4. November was relatively decent. If December was even stable, then hopefully we get some momentum. 4 p.m. Tuesday, February 10th, the stock market is now closed. All right. And now we wait.
So essentially, we're going to get three things for earnings on Robinhood. We're obviously going to get their numbers for Q4, but then we're also going to get, they don't show off guidance, but they show off operating expense guidance, how much they plan on spending for 2026. And then we're also going to see January monthly metrics, which gives us some insight into their next quarter. So keep an eye out on that.
Yeah,
I'm also very interested to learn what the international rollout looks like. Just it really reads from that banking and flywheel, just to see if it is functioning as a flywheel, what the plan is for that too. Of course, we all want to know about prediction market. That's really the wild card here, where they could between that, what they've been offering for margin book and the share lending, those could be upside surprises. So.
Yeah.
Cloudflare is up after hours by 2%. Don't have their numbers yet. Lyft getting a little bit of a green candle. Most of these are going to take a couple minutes, though, before we really see what the numbers look like. S&P closed at around 692. And we are
not a green in the after hours. We'll see if it holds, eh?
Yeah.
I mean, in case anybody's new, after hours movement before earnings are actually released are meaningless. So it would be nice if it holds, though.
An implied move, I think, is what, 9.5% or something like that. Last time I checked. So could be a good one, could be a bad one. If it's a bad one, then I can just accumulate more.
Okay, so still waiting for some other earnings. Gilead Sciences, they put out earnings. They beat by 2% on EPS, beat by 3% on revenue. EPS down 2% year over year. Revenues up 5% year over year. That stock is down 4%. GILD. Okay, so that one's now getting a bit of red. A-Lab, I know this is a big one based on Credo yesterday. Don't have their numbers yet. And then in a couple minutes, we should get Hood.
Okay.
Let us know in the chat if anyone is playing earnings, if you bought shares on this dip, if you bought puts, if you sold some calls. I think a lot of us here are generally long. But, I mean, a lot of people felt they missed Hood. And who knows? Maybe this created an opportunity for a lot of people to get access to the company again.
Just a fun thought experiment. If you could ask a question on this Robinhood earnings call, what would you ask?
I should think of a good question to ask. That would be a good idea.
When will I, the European guy, have access to the mighty Robinhood of the US and not just tokenized assets? That would be my question.
Vlad would tell you the tokenized versions are fine. Okay.
That's probably what he would say, yeah.
Yeah, Tanner, you can just ask the Canadian version of that.
Yeah. Well, I do want to ask what the heck's happening with WonderFi. We haven't heard from it since the original announcement.
Honestly, that's a pretty good question, and I'm kind of curious if the ambition is there, mostly like, hey, let's just roll out the crypto product like we rolled out in mainland Europe, or if it's like a crypto product, we're looking at tokenization, and then we're going to offer the full platform when regulation allows. The one nice thing about them too is like there's no question off limits, and they tend to answer pretty straight on when they can. Sometimes they can't, but
New
they're
CFO
very
this
direct.
quarter?
What do you say?
New CFO this quarter?
Yes, Shiv Verma, yes.
And okay.
I think the last one was Jason's last, right? Or is he still in transition?
Yeah, Shiv will be on the call this time. Shiv and Vlad.
Okay.
All right, we should be getting numbers in a minute.
Upstart revenue up 3%. I'm not seeing numbers on EPS for expected numbers, but they got 17 cents of EPS, which is positive. So revenue is up 35% year over year, up 7% quarter over quarter. Stock's up. It's very volatile right now, but yeah, up only 1.6%.
Up, we're red. That was a pretty ugly candle to the downside. There you go.
Okay, well, if you had to bet on the 9%, it was 9% negative.
Missed on Rev, it looks like. I'm trying to get the exact numbers. It looks like a slight miss on Rev. I don't have it officially yet. Yeah, they beat on EPS by 3%, missed on Rev by 4%.
Wow.
This is the first time they've missed on Rev in a couple of quarters now. I think almost a year. Revenue up 27% year over year. EPS, again, down 35%. That's okay. That's factored in. But they did beat by 2 cents on EPS. The algo immediately reacted to the revenue miss. Stock's already kind of recovering. It hit 79. I mean, not really recovering, but you get a revenue miss. Definitely Street's not going to be happy about that. Now, again, it is a slight miss. I'm trying to get the actual numbers, but Tanner, go ahead.
No, I was just going to say this company was never going to surprise to the up or downside by too much. And I don't mean the stock, but I mean the actual numbers, because we get to see like 98% of their numbers before they actually come out.
Yes, correct. 6.4%. It's struggling to hold 80 right here. Got to 79. We'll see if it loses 79, 78, then it probably
take a look at Lyft right now.
Lyft, are we dumping on Lyft?
Yeah.
We are. Oh boy, not good for Lyft.
Whoa.
Lyft is down.
Down 12.
Lyft is down. Lyft down 12. Hood down 6. I'm trying to get the press release from Hood officially so we can get these real results, but those are the top lines.
There's, by the way, there's not going to be guidance for Robinhood. They usually only do operating guidance, so there's not really going to be much that's going to save them other than potentially January numbers.
Yeah, and we'll get some of that disclosure today on January. Lyft missed by 2% on revenue. They beat EPS by 5,000%. Obviously, there's some probably tax shenanigans going on there. EPS is up 11,000% year. Revenue's up 3% year over year. Okay, so transaction-based revenue 776 versus 791. That's a miss on Robinhood's transaction-based revenue. Adjusted EBITDA 761 versus 833. They missed pretty heavy on adjusted EBITDA, and the street I think is not liking that. Maybe there were some other expenses we're not thinking about here that.
Well, we knew that they were going to have increased operating expenses because of the acquisition of Bitstamp.
That's true. That's also true. Correct.
But that was in the numbers.
Do not have the press release yet. As soon as I get it, we'll start reading. Zillow beat by 1% on revenue, 654 versus 650 million. They beat on EPS by 1 cent. EPS up 100% year over year. Revenue's up 18% year over year. Zillow, Lyft is still down 14. Zillow is down 5. And Robinhood is still down about 6 as well.
While we're kind of waiting on those numbers, since I think crypto will be definitely tied to the narrative of Robinhood for a while, are we in a crypto winter or is this something different?
I think so. I think 120 to 60, even if we just touched it, has to qualify as crypto winter.
Yeah, what is a winter if it's not this?
Well, it's usually tied more to lack of interest, fewer startups, lower volume. But I mean, every single time as well, the price has been impacted. So I think it's a both and.
Okay, so I have some stats on Hood, even though we don't have the numbers officially. Net income, 605 million. Transaction-based revenue, 776. Options was 314 million. That's up 41% year over year. Equities, 94 million, 54% year over year. Crypto, 220 million. That's down 40% year over year. Net interest revenue, 411 million. That's up 40%. OpEx, 633, up 40%. Net deposits, 15.9 billion. That's still a hell of a lot of money.
Well, yeah, wow.
Platform assets, 324. That's up 68% year over year. It's down quarter over quarter or month over month. Funded customers, 27 million. Gold subscribers, 4.2. That's up 58% year over year. Net revenue, 4.5 billion for fiscal year 2025. Net deposits, 68 billion in 25. I don't have any info on share buybacks, but I'm sure whatever shares they bought are going to be underwater given the stock fell.
Yeah.
Okay, still trying to get the deck and other information. We don't have that yet. A-Lab earnings.
Oh, the presentation is out.
It's out. Okay. A-Lab, by the way, down about 3.84%. Looks like they might have a deal with Amazon here, which is what's helping Arista. Amazon secures new Arista Labs warrant tied to 6.5 billion purchases, and they beat on revenue as well.
It's still hard not to love Robinhood, dude. Even just going through their deck already, I'm already getting excited.
Yeah, and here's some coverage on Hood, and then we'll get into the deck.
Coming up short at $1.2 billion. Some other key metrics, though, did disappoint, which is why you're likely seeing the stock down about 7%. Transaction-based revenue, that tends to be sort of a reflection of trading volume. That missed expectations. 776 million. Street was looking for 801 million for context. Options, biggest contributor of that, did fall short of consensus, and then so did crypto and equities there. Funded customers pretty much in line, 27 million there. In total assets, though, average revenue per user, also a significant miss here. That came up short. CFO Shiv Verma telling me that the street got a bit ahead of where Robinhood was on transaction-based revenue because of a change in rebates. So basically pricing on the back end, they moved to a different model in Q4 to cater to more active traders, where the numbers tend to be a little bit lower. The rebate is lower, but he did say they are gaining market share with those traders based on some of the public SEC reports. Says they now have the highest market share in options. A lot of focus, we've talked about, Mike, on prediction markets. Growth area for Robinhood tends to show up in the other revenue line item. That did beat expectations, 96 million. The CFO telling me that was up 300% year over year, predominantly due, he says, to predictions markets, calls it the fastest growing business within the company's history. And then January, we did get some updated numbers. Contracts there hit a record 3.4 billion. Robinhood did also share some January, February volume numbers. These are important. Equity volumes up 57%, options up 20%. Verma telling me that was thanks to a lot of dip buying. Start of February, he says, in the first 10 days, we are seeing, quote, a lot of trading activity, a lot of net deposits, and a lot of our customers leaning into the dip buying now. Flash forward, though, crypto trading volumes, that was down about 57% year over year in the month. Did ask him about a prolonged crypto bear market. Verma says that crypto, it's less than 20% of revenue, or roughly 20%, pointed to more diversity in the business. That other 80% has 11 businesses now with 100 million of ARR or higher. They're not going to give revenue or earnings guidance. We don't typically see that, though. Spending is set to increase 18%. They have done some in M&A, and they plan to invest heavily in product launches, but recovering a bit here, but still down more than 5%. Mike, back to you.
Yeah, obviously after the stock is already.
Any thoughts on some of those January numbers? And then we'll get into the deck.
I haven't taken a look just at the January numbers. I heard a little bit. It sounded good, but their options revenue got really hurt compared to expectations this quarter. Like 20
Neil,
million
real quick,
less than expected.
Can you send me the slide deck? Because I don't see it.
Yeah.
I'll read through the press release, and then we'll get through the deck. Our vision hasn't changed. We're building the financial super app, said Vlad. 2025 was a record year where we set new highs for net deposits, gold subscribers, trading volumes, revenues, profits. We closed the year with a strong Q4. 2026 is off to a strong start. We are incredibly excited about our plan and momentum for the year ahead as we focus on shipping great products for customers and driving profitable growth for shareholders. We looked at all the numbers already. They bought back 800,000 shares, ended up buying back at $119.86. So obviously those shares are a bit underwater, but they did spend about 100 million on buybacks. Total net revenues were up 52% year over year.
Like, there's weird things this quarter. Like, securities lending last quarter, 87 million. This quarter, 26 million.
Really?
Yeah.
Some of that's tied to the IPO, and I know IPO fervor kind of diminished in the last little bit of the year. So,
but what does IPOs have to do with security lending? Isn't that just
so essentially when a company is put on the market, usually there's not a lot of people that are willing to let their shares be shorted to lend them out, and so it creates a hard to borrow condition. And there's usually a lot of institutions that know when they can short, they're like, okay, it was an IPO, especially if it's overheated, it's going to probably come back down. So it just benefits the securities lending by quite a bit.
Okay, total assets 324 billion, net revenue 4.4, adjusted OpEx 1.9, adjusted EBIT again 2.5, funded customers 27 million. They got rid of a lot of debt accounts, which is why that number is not as high as people would expect. Again, 15.9 billion in deposits, down quarter over quarter, but still 19% growth rate. And then gold subs, they added 300,000 quarter over quarter. So that run rate looks like it continues to be very strong. We looked at their product velocity, looked at a lot of these events. They will have an event on March 4th, which they'll have even newer products. 1.8 million funded customers, stocks at about 79.80 right here, down about 8%. Retirement AUC, record 26 billion. Yeah, the real story on why the stock is down is transaction volumes. I mean, at the end of the day, there's a lot of good stuff to look at in the overall business, but I think the biggest question they're going to get today is, are you guys prepared for a market environment that is not as excited for trading, right? Like, if people just don't want to trade as much, can you guys survive and put up these growth rates? And, you know, if you believe in the long-term thesis, you believe that the product velocity and their new initiatives, banking and credit card, all this, they're going to find new ways to grow as they diversify the business. But right now, the business seems to be contingent on these trading volumes.
Yeah, it's not as hyper cyclical as it was, but it's still cyclical. And when the market's very strong, both in the crypto side and equity side, it does very well. When it's weak, I don't think Robinhood's going to be terrible like some people are expecting. If we do get a bear market at some point, alongside a crypto winter, that they'll post negative revenue. At least right now, with what they're rolling out with predictions market, international expansion, and sending out a lot of new products, that's very unlikely right now. But yeah, that's definitely going to be focused on in this quarter.
Yeah, obviously option sellers are winning today versus option buyers. I mean, it's been a volatile market, but Microsoft, Amazon, if you sold calls on those are doing a lot better than buying into the strength. 4.6 billion in cash. So they continue to have a pretty robust balance sheet. Again, $100 million. They still have 590 million of their buyback program. Let's see the credit card and how that's scaling. So net interest revenue, 411 million. That's actually down quarter over quarter. That also margin was up by. See, the other thing is margin. I think in Q1 is going to decline because I do think people are getting off margin because of weeks like what we had last week. So maybe I'm wrong on that, but that could be a sign of weakness in Q1. The overall margin book. Wow, yeah, it stayed the same in December. So 16.8 billion did not increase from November to December. We'll see if it decreased in January. Wow, January it increased 18.4 billion. Okay, so the question is, does it decrease? Did the degens keep borrowing for February, or did last week wipe people out?
I mean, I think that there will be some that have gotten out or had Mr. Margin call. I myself contributed to January's margin. I rarely use it, but I'm like, okay, I got money coming in. There's an opportunity. Let me make the most of it. And it worked out really well. But I think that like their margin product is so easy to use. Like literally when I needed to do that margin, I went in my app, like 2 or 3 clicks later. I think you have to go through a lot of agreements if it's your first time using it, but I'm ready to go as far as margin. Like the rates are very attractive too. So I rarely use margin, but I did use it at that point. And I think a lot of people are finding that out too, where it's, a very competitive rate, really easy to use, simple, clean, and you can get in and out of it like in 20 seconds.
Agreed. 196 million in margin revenue, 18 or 16.8 billion in margin book in January. That went up to 18.6 billion. So margin should do fine in Q1. And again, as rates come down, that should increase the amount of margin that's used. Credit card was up from 17 to 24 million. So they're starting to make some real money. That's on a $100 million run right now for the credit card. Securities lending obviously went down. Cash sweep went down. And then interest on their cash in general went down, but that's also because they bought back stock.
So
Neil,
go ahead. I'm plugging numbers here, and it's honestly not as bad as the market is reacting to it, right? And we might actually see a little bit of a turnaround here. We were down 9.5%, now only down 5%. Obviously, whenever the street is missing numbers here, that sucks. But I think people are jumping to the conclusion sometimes on the amount of assets that are on the platform. Like net deposits are showing that more customers are putting, net dollars onto the platform. They're just losing it because the market sucks.
Right.
But people are actually strengthening their relationship with Robinhood and doing more trades and getting into more products. Prediction markets is showing up really well. Robinhood Gold and retirement is all looking very strong. So all like the really long-standing relationship aspects of Robinhood that people need to worry about that are not subject to as much volatility on just how the market dictates the stock are looking good. So I think it's a little bit of an overreaction on the market right now.
I agree. I mean, their job in the call is going to send the message that the company is a strong company and is going to be a stronger company no matter how the market goes. If it goes down or if it goes up, they have revenue streams that will continue to generate revenue for them no matter what happens. And it's not new to Robinhood. It's how all the other competitors have survived through every single cycle. No matter what cycle we're in, they are making quite a lot of money. Now, Robinhood is still growing quite quickly. The numbers are not as big as the others, although they are becoming very big each and every year. but it is becoming a way more diversified business today than where it was. If these were the numbers that we got, let's say 2 years or so, 2.5 years or so, we would be worried because, yes, if we do see a prolonged, let's say, crypto winter, and if stocks stay flat for 6 months or they go down, and the business isn't as diversified as it is today, then it would be a problem. But today, as Tanner just said, I mean, people are using Robinhood for various of other things that they would still be using, that the money is still going to work no matter what happens in the market. What happens with the stock after the earnings call is done, I don't know. We're going down 8%, 5%, 8%, 5%. They haven't even said anything yet, so we'll see what happens over the next hour or so.
We do have Vlad here. Let's listen to him, and then we'll keep going through this.
Hey, everyone. I'm sitting here getting ready for our Q4 and full year 2025 earnings call. Here's a quick preview. Q4 was a record quarter that capped off what has been a record year, driven by incredible product velocity across our 3 strategic arcs, becoming number 1 for active traders, number 1 in wallet share for the next generation, and building the number 1 global financial ecosystem. On the active traders front, our goal is simple. Trading anywhere else should feel like a disadvantage. And I think we're well on our way. Customers traded over 12 billion prediction markets event contracts in 2025, making it our fastest growing business ever. Plus, we made Robinhood Legend even more legendary, and we shipped top requested features like shorting, which gives traders more of the tools they need to capitalize on any market conditions. On wallet share, we're building a financial super app. We added over 500,000 cardholders to the Gold Card in 2025, and we started rolling out Robinhood Banking, which already has over 400 million in deposits and is seeing strong direct deposit conversion rates. We're seeing great engagement with both of these products and are excited to accelerate as we enter deeper into 2026. Finally, on the international front, we now have over 750,000 customers outside the US. We're leading in tokenization with about 2,000 stock tokens available for our European customers to trade. We're also continuing to expand our product offering in the UK. Just last week, we launched Stocks and Shares ISAs, which is the local UK tax advantaged account, and that's been a top requested feature from our UK customers. All of this led to several records in 2025, including net deposits, gold subscribers, and overall firm revenues, which were up over 50% for the second straight year. There's a lot more to share, so check out our full results at investors.robinhood.com and tune into our earnings live stream on X, YouTube, and in your favorite financial super app, the Robinhood app. See you soon.
Yeah, I mean, look, I agree with you, Tanner. The numbers are not as bad as the street is pricing it in, unless you believe that like transaction revenues are going to continue growing only 15% for the next few quarters.
Before
Roy?
we get back in the numbers, there's a couple of things at the very beginning of the slide deck. You don't need to scroll up with that, but the very small fine print, I always look at that first because that kind of tells, especially at the beginning of the year, the narrative, what they're focusing on too. And there's a few things that like were kind of eye popping, actually quite a few, but just a couple. They said in 2026 we plan to ramp up our product velocity even faster, which is actually insane. They said this year you should see acceleration in app design and personalization. That's cool. They said we think so. They called this I don't remember the term, but super cycle for predictions market just at the beginning. But then they turned around and they said we think that private markets could become even bigger than prediction market. And then the last one, they had said that in a few years we'll really look back and have really underestimated how big our international offering can be. So some really interesting comments there at the very beginning of the slide deck.
Yeah, that long-term thesis, I mean, I think all of us have full faith they will execute against that. It's just this short-term volatility. Yeah, it sucks to go through, but it is also part of, being an investor in this name. So I agree. I mean, all those tailwinds you mentioned in the fine print, I would imagine if their product velocity is even stronger than it was in 2025, we are going to see AI, you have Cortex, Robinhood Social, banking, advisory. I mean, you have so much stuff that hasn't launched yet at scale. that'll eventually pay dividends. It just might be a little bumpy for the next few quarters.
What do you think they announced in March? Early March?
Yeah, they had said in that that it's going to be something related to family investing. Let me see if I can find it. We've got some exciting things coming to the family investing front at our event in New York City. So, don't know what that means though.
Yeah, and I mean, again, look, if you're going to let the stock price dictate your emotions, this is not the market to be investing in, because Microsoft and Amazon put up quarters that were unbelievable, and they fell 10%. So, I mean, Meta round-tripped earnings. We don't know what the hell's going to happen with NVIDIA, but obviously every stock, even if they're putting up decent numbers.
Let's not even put that into...
there's a world NVIDIA gets hit. If they're going to take Microsoft and Amazon down, I mean, I hope they don't take NVIDIA down, but it could happen. Cloudflare, that's up 14%.
Net deposits every single month. This company has positive net deposits. January looked better than December. Sort of a reacceleration of deposits back to 17%. If you actually look at the assets on platform, the only thing that really took it down was just pure market losses, like just $26 billion of Robinhood customer wealth just got erased. But that's the market. That's what Robinhood allows us to do whenever they just give us free will over our accounts.
Yeah, that wasn't all my portfolio, but some of it was.
Yeah. But yeah, I'm actually not frustrated with this quarter at all. I think this is Robinhood doing everything that it can do in a crappy market environment. If they say they're going to accelerate product velocity even faster, I mean, I'll believe it when I see it, just because last year was insane. But obviously, they do have new markets that they want to push into, and private markets could be a really interesting one. I know Vlad's been on sort of a lot of talks recently, talking about how, you know, the average investor can't win if they can't get access to Anthropic and ChatGPT and a lot of these companies that won't go private until they're at $1 trillion, valuations. So gaining access to retail investors might be a big opportunity for Anthropic, but also might be a big opportunity for Robinhood's customers as well.
Yeah, I mean, look at the slides, right, that you have here, like the $191, right, the average revenue per user. Like even in a weakish quarter, it's still 191. It's still flat quarter over quarter, but up almost $30 year over year. And that's in a so-called weakish quarter. Yes, October was still fine, but I think December, the metrics weren't that great. I mean, we ended the year definitely in a much weaker spot. So that's 191. And the trajectory here to me is quite clear. It's going to go up and to the right, especially as they release more and more products, as they monetize more and more. As long as that number doesn't decrease every single quarter, that is more important than assets under management or things like that.
Yeah, I would agree. I mean, look, price action definitely is annoying people, and that's fair because we've had a lot of companies that price action has not been the best, but I am not seeing a bad quarter here. I really am. I'm not. I mean, the broader question is, do we believe, even if as Neil said, markets are relatively flat, crypto winter, yada yada, that they can continue growing and beat the estimates from last year? And look, that's going to be management's job to convince the market of today, and that's what the product velocity is going to have to lead to. They're going to have to execute. They're going to have to get people onto banking, credit card, all these other things. But at its core, like maybe the stock is not going back to 100 anytime soon. I don't know if we're revisiting below 70. Like I don't know if this is that type of a quarter where it's like every analyst slashes their price target by 40%. Like I don't think that's happening.
No. Did you see the slide? Here, I'll find the exact number. Slide 37.
Slide 37.
Yeah, you got some scrolling to do. It just shows off, their growth, which is still very small for futures and for index options and stuff, but they are seeing demand for their new products. And so I'd like to see similar slides for credit cards, banking, all of these things. But the new initiatives are leading to new growth. Now, not all of them are as successful as event contracts, but maybe we see a pickup in some of these new products as well. And then who knows if in 2026 they add on new verticals once again, and then these charts sort of start all over again. The old ones still continue to compound, but then we have new family trading products that might end up seeing growth. Could be interesting.
By the way, for those who hate the quarter in the chat, please just give me one sentence on why outside of the stock.
It's down.
Because I'm seeing a lot of people say that you guys are in denial. It's like, well, hold on. What exactly about the quarter is wrong? Like, just a simple sentence would be nice. What is bad about the quarter?
Not the stock, but the company is down 7.5%.
No, so I'm genuinely outside of the miss on revenue, which we talked about. It's like, okay, maybe that's not the best, but that's also against the analyst. And also, Shiv already explained why there was a miss there, so I don't know exactly.
Yeah, I think that the reason is, at least for some, they may be used to companies like Palantir, which like every single quarter is going to be higher revenue than the last one. It's just the way it is. Most businesses are actually not like that. And then there's some like Robinhood that are cyclical. And people are saying no guidance. They've never guided.
They never
do
guide.
monthly.
They've never guided.
So.
Second of all, this is not Palantir is a company that gets large contracts which you can have reoccurring revenues on. Robinhood was never a company outside of the gold subscriptions that are reoccurring. So if you invested in Robinhood because you thought they would always put up the same numbers because they get these 10-year contracts, that's not what they do. That's not what Schwab does. That's not what.
Even guidance on what? We expect the market to go up over the next 3 months. Like, they don't know what the market will do with it. They are way too small right now to say that, we're going to issue guidance because our gold subscriptions make up 90% of revenue. It's not possible. Like, their guidance will be based on their crystal ball or whether or not options volume will go up, crypto or is going up. It doesn't work like this. Although I would say that today I had the same example with Oscar, for example. So Oscar, they reported earlier today, stock went down for like 5 minutes because of the double miss, which they explained why revenue was a miss. But then the market paid attention to guidance, which the market was expecting just over $12 billion in revenue. They issued guidance for $18 to $19 billion for this year. The stock went up 10%. But a lot of the comments were, this is a shitco, double miss, what a terrible, terrible, terrible company. And then a couple of minutes later, it's like, what a great stock to own because it's up. So making up your mind just because the stock is up before you even look at the earnings, to me, it doesn't make much sense.
Yeah, I also think, guys, Palantir had an amazing quarter, but they're down from where they were when they reported.
But must have been a bad quarter. 70% year-over-year growth with improving margins. An insane guidance.
SoFi had one of the best quarters we've ever seen. That stock got hit pretty.
No, it went down. It was bad.
Yeah, but that's because of Tanner and his conversation with Anthony Noto. So we blame that on him.
Yes.
My bad, guys.
Look, I get stock price is, but did Microsoft have a bad quarter? No, neither did Amazon. Those stocks got hit. So I'm like, it's unfair to expect Robinhood to go to the moon when the market environment is taking down the best companies on the planet because of a miss on Azure or because they're spending more CapEx.
Yeah, and honestly, like if you're a long-term investor, what the stock moves like after or hours can be exciting and fun, and enjoy it or not, but ultimately it's more the long term. Like, are there numbers or is there any indication here that the long-term thesis has weakened or slowed? It's actually the opposite. And if you're a long-term shareholder, as long as you have some capital there, your best case scenario is not that they do a great job on the numbers and then the stock goes up 50%. It's that they do great on the numbers and the stock tanks so you can own more. That suddenly looks a lot more attractive as the numbers go down.
Unless you have options that expire.
That's true. Yeah.
This week, then you are not happy at all.
I wish Cloudflare would just go down more so I could buy it, but they just will not. Excellent company.
Let's get an update on a couple of the other names that reported today as well.
Mike, yeah, Lyft share is dropping 14.5%. Gap EPS coming in at $6.72. That's not comparable to estimates. They're noting a sizable benefit from taxes, which analysts were not factoring in. Revenue coming in at $1.8 billion adjusted. We're also not going to compare this to estimates. The company pointed to a $168 million impact from certain legal, tax, and regulatory reserve changes and settlements. Now, without that item, Q4 revenue would have been $1.8 billion, which is actually in line with estimates. The Q4 release announcing a new $1 billion share repurchase program that represents roughly 15% of their market cap. Active rides for the quarter coming in light, 29.2 million versus 29.5 million expected. Gross bookings coming in right in line at 5.07 billion. And then looking ahead on guidance, you got Q1 gross bookings in line with street estimates at the midpoint of about 4.9 billion. Q1 adjusted EBITDA and adjusted EBITDA margin both coming in light at the midpoint. Those shares down still around 14.5%, Mike.
Yeah, pretty negative reflex reaction. Mac, thank you very much. Don't miss a First on CNBC interview with.
And then outside of Lyft, let me pull up Ford as well. Here's what we had for Ford.
Of their results relative to analyst estimates in 4 years. Ford earning 13 cents a share. The street was expecting 19 cents a share. Revenue did come in better than expected. A couple of things may explain why the analysts were expecting better results than what Ford reported. First of all, there was the Novelis aluminum plant, that fire in upstate New York, which supplies aluminum to the F-Series. That hurt volumes there. Perhaps some of the analysts didn't expect the volume impact that Ford actually saw in the fourth quarter. And they also saw a $1 billion greater than expected impact due to tariffs, due to some of the offsets that they expected to be factored into 2025. They're not going to be factored into 2026. So it's a $2 billion headwind hit there for Ford in 2025. So as you look at the metrics within the fourth quarter, a couple of numbers stand out. Adjusted EBIT of $1 billion. The street was expecting $1.23 billion. Free cash flow, negative $2.1 billion. And for each of the divisions at Ford, this is the same story that we've told for some time. Two of them are profitable. One is not. ICE models made a profit of $727 million. Commercial vehicles continues to be the best performing division within Ford, earning $1.23 billion. And then the EV division continues to be a loss, $1.2 billion in the fourth quarter. The guidance for 2026, Ford expects to earn between $8 and $10 billion with free cash flow between $5 and $6 billion, capex of $9.5 to $10.5 billion.
Ford is up about 1% after hours. Astera beat by 14% on EPS and beat by 8% on revenue.
That's a great quarter.
That stock down 7% as well.
Oh,
even after the quarter.
I take it back.
Look, here's the other thing. I mean, and I see people saying this in the chat, and I agree with people saying this. Hood has had an expensive premium for a while. A lot of names have. Rocket Lab has an expensive premium. Palantir has an expensive. Tesla has an expensive premium. So if we are getting to a market where these premiums are normalizing, then seeing Hood get its multiple compressed, which if they keep putting up these growth rates will, make the company cheaper. It's not crazy. Now, if you're trading it, it's probably really annoying. But if you're just holding it, this is what you have to do, right? Tesla went through this. Rocket Lab went through this last week until it rebounded. Robinhood went through this last week until it rebounded. So, I don't know if we get back to those absolute lows, but multiple compression would not be crazy to see.
This is a little bit of copium. And actually, I've been seeing this a little bit across their earnings call or their earnings presentation, where they keep turning bad slides into good slides. They're showing last 12 months here, which still puts Q4 at over 108%, but that's not what the quarter was. They're balancing it across 3 other great quarters. But still, that's still real statistics. And if you're looking at this company on the last 12 months, you still have a rule of 40 of 108%.
Yeah. Which is gross.
Like in a good way. Like very, very good. Cash ended up growing. Yeah, I like this quarter, but I don't know if any of us even expected a very large beat or anything like this, just because we already saw the data that came in. That's also why I'm kind of surprised by the sell-off. Is like, okay, well, what actually happened that we are surprised by? We knew their trading volume before the quarter even expired.
We've seen this though for a lot of earnings results this season. Not every company, but there's been a lot of good and better than expected results that just get sold off, and it's the mood that the market's in. Usually, it's tied to capex, and that's not really the case for Robinhood. They did put out the year numbers. One other number that was interesting too is Bitstamp, which is mostly institutional volume for crypto, is up 20% quarter over quarter in terms of volume. So still down year over year, but it's interesting to see that accelerate, especially the way they're talking about that. Small compared to everything else, but something to keep an eye on.
Yeah, and for those asking what is the red flag is they missed on revenue. Transaction revenues had to be like 50 million higher. That is the red flag. But outside of that, and you guys let me know, I'm not seeing something that is, oh my goodness, there is an issue here. Like if gold subscribers grew, 5% versus 40%, I'd be like, what's going on? Why can't they convert people to gold, right? These are the things I'm looking for. But revenue slowing down, it's like, yeah, that's the market slowed down, so that's why revenue slowed down.
I saw a slide in here somewhere where it broke out not just the trading volume of Bitstamp, but the actual revenue, and now I can't find it. I've been trying to look for it.
Yeah, it's slide. Well, I think it's slide 38 that you're looking for, and it actually breaks out the institutional specifically because there is some retail on it.
Thank you. That was it.
It'll be interesting to see how institutions, if we are in a crypto winter and that continues for a while, which winters do last a little while. They're not as long as the summer, thankfully. Up 23% for institutional. The take rate is terrible, by the way, on that. So this isn't a like, oh man, the crypto road is going to be great. No. But it is kind of intriguing because this is a new acquisition. And we've seen time and time again with acquisitions for Robinhood that they don't just take the company that they bought and kind of leave it as is. You also see acceleration for trade PMR likewise. So, but yeah, iteration, the acquisition evolves and it tends to take more market share. So it's a good trend.
Also, there is, I don't know who's surprised by the report here, because remember, the stock got split in half for a reason. The reason is we just got it here in the presentation. Yeah. The weakness in some segments of the business. Second of all, it does freakishly follow Bitcoin. So if Bitcoin gets stuck under 70K, Robinhood doesn't move from there, right? Bitcoin sits at 68, 69,000 right now. It doesn't move. If it starts to move in the next couple of days, I assume Robinhood will move with it as well. Does it make sense? Probably not that much. Then when you look at crypto as a percent of total revenue, it is now at 17.2%, which is less than the 21% we've had last quarter, and definitely less than the 35% we had 12 months ago. Then we have the other revenue, transaction-based revenue, that's now 11.4% of total revenue, which is more than a 2x increase quarter over quarter. So to me, as long as they diversify the business more and more, I think Wall Street is eventually going to figure it out and say, okay, you know what, even if Bitcoin doesn't move that much, the business is diversified enough and it should be fine. Lastly, if we go back a week or two ago, I think I saw a couple of analyst notes, if not all of them, with price targets at $120, $130, $140, $150 defending the name. So I would be surprised to see them downgrade the stock tomorrow. But then again, I've seen some crazier stuff with analysts after the fact that the stock goes down. So we'll see. But 10 days ago, a week ago, all of these analysts were defending their price target. We'll see if they change their mind after this report. If they do, then, well, I guess they were full of it 10 days ago.
I think a lot might come down to the Q&A. I expect they'll get asked a lot because they did kind of feature it in the writings that they had, international markets and international opportunity. That, we saw the video with Vlad talking about the ISAs and SIPs from the UK having launched very recently, which makes that a credible international product. Between that and, of course, what they're doing in the predictions market and launching the Robinhood chain, tokenization, that won't be like meaningful revenue driver necessarily this year, but it can change the narrative. But yeah, the predictions market, like they've had the acquisition, it's finalized here in last month. It effectively, if they go after market share, maybe not, but if they're like, hey, we don't have to pay the cent out to Kalshi anymore, that doubles their predictions market revenue instantly. Like that's pretty incredible, especially relative to where crypto is. It's not like ideally crypto bull market, rips right along, and it will again. Like crypto is not dead and over, but yeah, this is part of the business. I did find out what was so bearish and why it's going down though. Look at slide 40. This is alarming and shocking and horrible. The average annualized revenue per employee is down by 2% year. It's over. It's over. I'm just kidding.
Yeah, they added 58 employees.
Overspending and overhiring. My goodness. Not really.
Real quick,
a lot of those hires could also be Bitstamp. That's why we saw a big ramp up in the last quarter was Trade PMR and Bitstamp, and now they could be getting rid of some of those people where they have duplicate jobs, stuff like this.
Yeah.
So January metrics, they added 100,000 new funded customers, 4.5 billion in net deposits. Platform assets was flat December to January, 324 billion. Equity was up 227 billion versus 189 in December, compared to January of last year. That's up 26%. Crypto was at 22.9 billion. Actually did better than December, even though crypto was ugly in January. So that is up compared to December. Margin was up 2 billion. That's big for them. And then options was basically flat at 200 million. So I guess the simple bear case for Q1 is that if February and March metrics don't get better or show the type of growth that the street needs to see, stock's probably flat. I don't know if it collapses down to like $40, $50 like people are saying, but relatively 70 to this 85 range, you could see it being stuck there. If it supersedes those expectations, it has room to expand. But if it's a flat Q1 because of the things Roy was talking about, crypto winter, et cetera, then you kind of just got to weather the storm as we get to the end of the year.
I am all set up on this earnings call. Are we going to discuss what to ask? What are you guys thinking?
The chat, if you have any questions that we three should ask, we can go through some topics. I actually didn't think of a question yet.
You haven't?
I have not.
Yeah. How much money did you guys make on the Super Bowl? Tell us the exact number.
I was going to bet on the Seahawks. I really was. And then someone I talked to talked me out of it. But I was going to. And that's why the game was probably boring for me, because I had no money on the line. So I made nothing.
Yeah, I mean, like they had, was it 250 million contracts traded, $2.5 million earned. But no, I have three questions kind of ready to go. A fourth one, maybe. And you reminded me, I need to get in that.
I don't think any of us are going to ask, why is the stock down? Oh my gosh.
Well, why can't it?
Tanner, what do you show it?
It just says earnings will start soon, but it's not showing correctly.
Yeah, so you guys will probably see us on their earnings because we're using Zoom. So
yeah, I would have loved to join on the actual camera, but I think it's going to get messed up a little bit. So I'm just going to join on my phone and then just do it that way. Okay.
Is there a way we can redirect when margin calls me? Ask about Vlad's skincare routine. Oh my gosh.
Ask if Vlad has a girlfriend. Vlad has a wife.
Vlad has a wife, dude. Vlad has a wife. Again, if the stock was at 85 right now, I think the sentiment would be different. But that's with every earnings, right? If Palantir had dropped 10% on those earnings, people would have said it's a horrible quarter. It happened to go up 10% and then drop 10% the next day, which the short-term sentiment went through the highs and then came right back down to normal. If Robinhood gaps back up to 85 tomorrow, I don't think that's crazy. If it gaps down to 77, 78, I also don't think that's crazy.
I actually have been, I don't know if this is the appropriate time to ask, but with Robinhood Social, if they're going to get into some sort of copy trader features. I know that they've potentially talked about getting into that, but then they didn't say if they were going to pay creators or not. Or yeah.
I would ask about customer acquisition for banking when they rolled out. Will they do match promos again? Yeah, I think the broader philosophy they have on banking, and you know, Robinhood is one of the companies that has like 20 analysts ask a question. So there's a lot of stuff they go through. I rarely leave a call thinking that they didn't answer anything. Social, that's going to be something they're focused on this year. The AI stuff, Cortex, I mean, their financial LLM, I'm really excited for that. Just being able to prompt different queries and get results.
What's the net gain or loss their customers had on prediction markets over the last year? That's so funny. And especially that Tim Sweeney asked that is hilarious. It's probably going to be a loss. If you take a big enough selection of customers and they all are taking both sides of each trade and Robinhood takes 2%, I would assume it's a net loss. But
also,
yeah.
there's no, we didn't get the January prediction market in the deck, right? So they're probably going to tell us how many billions of contracts were traded. Did we get December? Yeah, December's was like 2.5, I think.
2.9. It was just slightly weaker than November. Ask about their rotation into Asia.
Oh yeah, they have an Indonesian exchange they acquired, right?
Yeah, two companies in Indonesia. They do mention it at that very small font section, along with all the other stuff for 2026. So yeah, that'll be very interesting to see what that rollout looks like. We don't know a lot about it.
I love the way you read earnings calls because I'm like, let me go look at the big charts. And you're like, okay, well, all the details in the small print, you actually pick up on what they're saying.
Yeah. So Robinhood, just because we know the monthly metrics, and there's some things that we don't know for sure, but like a lot of the numbers are still very important. But the unknown stuff, especially at the start of the year, is all that 2026. What's their initiatives? What are they focusing on? What are some of the things that they're saying? So, yeah.
They also, Tanner and I were talking about this on the phone a couple of days ago, but these guys are still planning to do 3-4 events this year. March 4th is the first one. So I think people forget when they come out with new products and they come out with all these different new ways to continue making this the financial super app. A lot of people start to remember, oh yeah, this is why we pay a premium for this. Like we pay a premium because they ship, they have a lot of products that get out there. And they continue to expand the ecosystem for 27 million users. Now, the critique against that is that the products take a lot of time to get into the hands of users. And I think that's fair. I also think there's a level of safety. They can't just give a 3% credit card to 5 million people immediately. But yeah, I agree. If they can speed up the product rollout, that would not be a horrible thing.
When is Robinhood investing in Mr. Beast? Yeah, they'd want to tokenize them. Better customer support.
Does it make you wonder why they are doing 1 million giveaways if they're missing on revenue? No, because the ROI on that 1 million is probably greater than 1 million. Again, the miss on revenue, remember, Shiv gave that quote to CNBC. He said the analysts, remember, whenever we say miss or beat, it's a bunch of fancy people in an ivory tower that are trying to figure out what the number should be. And a lot of times it's bullshit.
Yeah, it's not Robinhood's numbers.
It's not. Yeah, it's. I mean, like NVIDIA. That's why Jensen deserves a lot of credit because he has to deal with it the worst of people putting, and he still beats every single time, and he finds a way to get higher numbers. So Shiv said the analysts were a little bit too aggressive on certain elements of their business that he thought. Usually the analysts for Robinhood get it right because it's very similar to compare them to the DARTs, is what they're called, daily average revenue trades across every brokerage. But if they get a little too excited, this happened in Q3 of 2024, where the analysts thought they would do 640. They came in at 620. There was a 20 million mismatch. It happens. It's not a reason the stock needs to go down 20% because they missed by 10 million on revenue.
What do you think they have to say during the call to maybe see the stock go green?
Go green's a stretch.
Yeah.
They definitely can say a lot of great things, though. Like there has been a lot of moments on the calls where they have excited investors, and I think that Vlad is capable of doing that if he can talk about new verticals and the the confidence in which that they can grow market share there. I saw Parsifal in chat earlier say that it doesn't matter what they do. It's, they're going to be tied to crypto a little bit. And I think on the stock price right now, that is true. But I think in order for them to gain new customers and eventually new revenues and new profits, they need to enter they need to grow in terms of market share. And it doesn't matter how big the overall market is, they need to be a larger and larger percentage of that market. Like, we know that crypto is going to fluctuate. We know that equities and options are going to fluctuate. But they just need to prove constantly that they're going to continue to grow. And they did do that this quarter. Like, we saw net inflows during a heavy market of, people selling and capitulating. That's hard to do.
Yeah,
I will
think,
say,
go
ahead.
They tend to not announce, new products or acquisitions during these because they have 4 events through the year. But predictions market, as far as a number, since they don't have that as much in January, it's not, or early read in February, could shift and change things, especially what their plans are. Like, if they're like, hey, we're just gonna do this to, rather than claim more market share, which I think will be fine, we're just gonna effectively double our revenue from that. If they give us a kind of a target like that looks like that could flip us from red to green. But there's not a lot of things just from the call that they can say. Go ahead, Amit.
Yeah, no, I agree with everything you said. And I also think that in a weird way, I think Vlad likes being in this position. He has talked many times about being the underdog, and after you have a quarter where the market doesn't react as well and people are upset, and going out there and still being able to explain your position. I mean, he's had the last year of speaking from a position of strength, because every time he put out a quarter, the stock went crazy because the stock was a lot lower than it is today. This is one of the first quarters in a while where it's the opposite reaction. And so I think Vlad, in a weird way, loves being the underdog. And if people are counting out Robinhood because they missed by 10 million on revenue, he is ready to reconvince why they are the company they are. And so we're going to find out as he gets into this call today.
Okay, I think I have my question. By the way, the call's starting like now. But I think my question is going to be on if they're still going to look into acquisitions to grow into new verticals in 2026.
I don't think that's a horrible question. And I
Are
think
you
they
guys
will.
really writing questions and not telling me? But like, what are you guys asking?
Every time I've had a question, it happens literally 20 seconds before.
I know, and then you get up there in front of every CEO and you go philosophically, and then you go on about like their mindset about something. It's like, ask about the business.
Oh, hold on. Last time I asked explicitly about the business on Robinhood. I asked about the cyclicality of it. The cyclicality of it. I literally was like, how are you guys going to do it? Is a relevant question to today, that's for sure. I wasn't going to ask Jensen about H200 sales to China.
You should have. No, I think you did a great job, but yeah.
My main question, and somebody might end up taking it, not you guys, but there's a bunch of analysts, is on specifically what their plans are with the predictions market. If the goal of this was just to take more market share, launch new products, or just effectively double their revenue.
All right, I think the call is live.
Vlad Tenev, CFO Shiv Verma, and VP of Corporate Finance and Investor Relations Chris Cagle. Vlad and Shiv will offer opening remarks and then open the call to Q&A. During the Q&A portion of the call, we will answer questions from the audience, which includes institutional research analysts, finance content creators who may hold an ownership position in Robinhood, and both institutional and retail shareholders. As a reminder, today's call will contain forward-looking statements. Actual results could differ materially from our current expectations, and we may not provide updates unless legally required. Potential risk factors that could cause differences, including regulatory developments that we continue to monitor, are described in the press release we issued today, the earnings presentation, and our SEC filings, all of which can be found at investors.robinhood.com. Today's discussion will also include non-GAAP financial measures. Reconciliations to the GAAP measures we consider most directly comparable can be found in the earnings presentation. With that, please welcome Vlad and Shiv.
Well, hello, everyone. It's great to speak with you today. We're back with a live audience, this time from our global headquarters in Menlo Park. And for the first time with Shiv as CFO, following in Jason's big footsteps. Welcome, Shiv.
Thank you.
Great to see all the shareholders and institutional analysts in the audience. So let's get right into it, shall we? So as a reminder, we're focused on our three-part strategy. Number one in active traders, number one in wallet share for the next generation, and our long-term arc, number one global financial ecosystem. Looking back on 2025, it was an incredible year of incredible product velocity across all three of our arcs. First, active traders. We want active traders to feel like they're at a disadvantage trading anywhere but Robinhood. It's a big priority for us, and we're seeing big results. In Q4, prediction markets volumes doubled, more than doubled yet again, with over 12 billion contracts traded in 2025, which is the first full year of prediction markets. Customers have already traded over 4 billion so far in 2026, so we're seeing the momentum continue. We also expanded our equities offering with the launch of shorting. We love giving our customers more tools to navigate the markets, and we see them responding. Over 11 billion of equity notional volume in the first couple of months since shorting went out. Second, wallet share. We continue to make progress building out our financial super app and becoming our customers' primary and secondary financial account. So a lot of attention typically goes to our active trading offerings, and it should, but we've also been making a ton of progress broadening our offering and attracting more long-term investing to the platform. Over 40% of our total assets are now across ETFs, advisory, retirement, and cash. So it's great to see customers trusting us with more of their financial lives. Robinhood Gold Card, up over 5x in 2025 to 600,000 customers. It's reached over 10 billion in annualized spend. Customers love the product. They love the 3% rewards, but also the intuitive user experience, the metal card and the solid gold card, and capabilities like virtual and single-use cards and all the family features. As we've been rolling out the card, we built increasing confidence in the economics. So we plan to continue accelerating the rollout, more than doubling the amount of customers with gold cards this year to well over 1 million by the end of the year. Robinhood Banking. So we began the rollout of Robinhood Banking in the past few months. Customers are really excited about this. We're building the kind of banking experience that was once limited to the ultra wealthy. Strong early results with our initial over 25,000 funded customers who have brought in over 400 million in balances. And perhaps the thing that gets me most excited, over 50% of our funded customers using banking have enrolled in direct deposit. So as we look at this, it makes us more confident that we're achieving product market fit with this offering. Now, third arc, global financial ecosystem, our long-term arc. We're making good early progress as we expand to different markets across the world. Bitstamp continuing to scale, volumes up 2x since we closed in June. Bitstamp product and engineering teams have been humming, so it's great to see so much progress here. We're also making progress expanding internationally, now with 750,000 customers outside the US. Just last week, we launched ISAs in the UK, which is the local tax advantage account in the UK. And this was actually the top request from our UK customers, so really excited to deliver it for them. I'm excited to watch these businesses scale as we launch in more and more new jurisdictions and we round out the product offerings. I think in a couple of years, we're going to look back and we'll really have underestimated how big our international business can be. Now, taking all this together, our relentless product velocity has driven another strong year of results. Strong double-digit year-over-year market share gains across equities, options, crypto, and margin, which, by the way, includes positive net transfers, positive inflows from all of our major brokerage competitors for the last 8 quarters in a row, which is pretty amazing there. I think we've got a lot of headroom here. Our customers grow faster than the industry. We continue to deliver new products, new capabilities, and we're seeing our customers continuing to trust us with more and more of their financial lives. So Total platform assets grew nearly 70% year over year to 324 billion. Net deposits, a record 68 billion, which is a 35% growth rate. Gold subscribers grew nearly 60% year over year, Shiv, 4.2 million. So revenues, putting it all together, which were less than 3 billion a year ago, grew to 4.5 billion in 2025. So it's great to see that 50 plus percent revenue growth for the second straight year. So quite amazing. So before I get into our 2026 roadmap, which should be very fun, I'll turn it over to Shiv to walk through more of the business and financial results.
All right.
Over to you, sir.
Thank you, Vlad. So I'm excited to be here for my first earnings calls. To get started, there's 3 key takeaways I want to get across. First, 2025 was a record year for Robinhood, with strong growth and profitability. We had records across net deposits, gold subscribers, revenue, adjusted EBITDA, and EPS, just to name a few. All of this was driven by incredible product velocity and our relentless focus on efficiency. And we also finished the year strong with a record Q4. Revenues and adjusted EBITDA were both records, and 2026 is off to a good start. Now, second, our business continues to diversify. We're now up to 11 businesses with over 100 million in annualized revenue, and several more are making great progress, including Robinhood Legend, which is really close, and the Gold Card, which is on track for this year. Additionally, Trade PMR, futures, index options, and Robinhood Banking are all scaling really nicely. And third, in 2026, we plan to ramp up our product velocity even faster while delivering another year of profitable growth. There is a massive opportunity in front of us, and we see the path to compound shareholder value for years to come. All right, so let's review 2025 results, and this is all compared to last year. First, revenues were a record 4.5 billion, up 52% year over year, as Vlad said, and up over 3 times in the past 3 years. Adjusted EBITDA was also a record of 2.5 billion, and that was up 76%. And adjusted EBITDA margins were also a new high of 56%. We also delivered incremental adjusted EBITDA margins above 70% for the 3rd straight year. And at the same time, we managed our share count closely, leading to record EPS of $2.05. And our philosophy is that the denominator matters. And over time, managing the share count closely should deliver value to shareholders. So let's look at Q4, and this is all compared to last year as well. First, revenues grew 27% to a record 1.3 billion as our customers remain engaged and continue to trust Robinhood with even more of their assets. Net deposits continue to be robust with 16 billion of net deposits in Q4. That's our 8th straight quarter with over 10 billion of net deposits. And trading volumes grew to new highs across equities, options, futures, and event contracts as we continue to win market share and saw record net buying from our customers. Now, interest earning assets were also up 39%, driven by strong growth in the cash sweep program, margin, and our credit card loan book, as we continue to win larger customers and deepen relationships with existing customers. Margin in particular has been great. It's up over 100% in the past year. And Robinhood Gold, that also grew 58% to a record 4.2 million subscribers. We think Gold is the best deal in financial services, and we're going to keep adding to its value prop. And on expenses, Q4 adjusted OPEX plus SBC was 597 million, as we managed expenses to approximately 15 million below our latest outlook. All right, so let's move to 2026. As we built our annual plan, there were 3 areas that we focused on. First, we want to continue accelerating our product velocity. Customers are responding incredibly well to our new product initiatives. We're gaining market share, launching innovative products, and entering new markets. We believe shipping even more products and value to customers can deliver outsized growth for years to come. Second, we aim to deliver another year of 20% plus net deposit growth. This year, we reached nearly a third of 1 trillion in assets across the platform, and we're well on our way to exceeding $1 trillion of assets in the coming years with our rapid product velocity and the $100 trillion plus generational wealth transfer already underway. And third, we've built our plan to deliver another year of profitable growth. Even as we invest for growth, much like the robust revenue growth we've seen over the past few years, we are staying lean and disciplined in the way we allocate capital and operate as a business. So to our expense outlook, for 2026, our outlook for adjusted OpEx and SBC is in a range of 2.6 to 2.725 billion. This translates to an 18% year-over-year expense growth at the midpoint, which is below the 22% growth rate we managed to in 2025 on a comparable basis. So just to give you a little bit more color on how we built the plan, the 18% expense growth is in 3 areas. First, about 5 percentage points of that growth is going into our existing businesses, net of any productivity improvements. These businesses drove the vast majority of our $1.5 billion of revenue growth in 2025, and we want to keep scaling them and gaining market share. Second, about 3 percentage points are from the full year cost effect of our 2025 acquisitions of Bitstamp and Trade PMR. Now, these expenses will also come with the full year effect on revenue growth as well. And third, about 10 percentage points, or more than half of the 18% growth, is into new and scaling businesses. This is our biggest area of investment as we continue to accelerate product velocity. Now, some of these investments include the Robinhood Gold Card, Robinhood Banking, Strategies, Prediction Markets, Cortex, Robinhood Social, Robinhood Ventures, the Robinhood Chain, tokenized real-world assets, and continuing international expansion. It's a pretty long list. And as a reminder, we underwrite all investments to strong ROIs and will stay nimble as we execute against our plan. And as I said at the outset, we'll continue to be lean and disciplined in the way we allocate and operate. So before turning it back to Vlad, I also just want to share a little bit on what we're seeing on the strong momentum into 2026. As you saw in the release, in January, equity trading volumes were up over 50% year over year, and options volumes were up 20%. We also had all-time highs in net buying, event contracts, futures, and margin. And while it's early, so far in February, the average daily trading volumes are up across all categories versus January levels. And Q1 net deposits are also off to a good start, with $7 billion plus so far in the quarter, including over $2 billion last week. So it's fantastic to see customers engaged to start the year. Putting it all together, we are incredibly excited about our plan and momentum entering 2026 as we work to drive another year of profitable growth. The team continues to ship for customers, and our financial North Star remains the same: maximize earnings per share and free cash flow per share for shareholders over time. Vlad, back to you.
Thank you, Shiv. You're starting to get a taste of what this killer next to me can do in the CFO position. So very excited. We compromised, by the way. Shiv prefers to stand, so we decided to do half the earnings call seated and half standing. All right. Just over a year ago, we shared with you our 10-year vision for Robinhood at our Investor Day in New York City. We were excited about it back then, felt it was very ambitious, but I think in hindsight, we realized we underestimated what we could do in 1 year, not to mention 10 years. So today, I'm going to tell you what we have planned for in 2026. And we're by no means complacent. This is going to be an ambitious plan. As we continue to execute, Robinhood will become increasingly synonymous with the financial service category as the financial super app. So let's get right into it, starting with what we're doing for active traders. Now, I'm not going to go into every little detail of the roadmap. I'm going to prefer to focus on areas that are particularly meaningful and maybe surprising. So prediction markets, fastest growing business in our history, 300 million plus run rate in its first year. I think we're just at the beginning of a prediction market super cycle that could drive trillions in annual volume over time. This year is going to be a big year. Olympics are going on right now, World Cup coming in the summer, continued growth in the non-sports categories, and of course, our Rothera, which is our JV with Susquehanna, coming online. Growth of prediction markets has also led to a greater focus on our app design and personalization. We've been adding so many new products, so many account types, lots more capabilities that it's becoming increasingly important to personalize and continue to chisel the user interface, making sure we're putting the right things in front of the right customers. Now, many of you have already noticed the work that we've put in here in the past few months through changes to the home interface, search and discover, as well as notifications. This year, you should see this accelerate with more personalization, better cross-asset linking between equities, crypto, and prediction markets, and us continuing to experiment to ensure that our user experience remains top-notch. Then, Cortex. Two big things. Cortex Assistant in the main app, and the goal is to become the best AI for all of your financial needs. Cortex for Legend, to use an analogy, think of Cortex for Legend being to active traders what Cursor is to software engineers. We think it has the potential to completely transform trading, and we're right at the frontier there. Both are rolling out in the coming weeks and months and scaling throughout the year. Robinhood Social. So Robinhood Social will start rolling out to the first customers very soon. We're really excited about how it will drive discovery and engagement. We're going through internal testing, and we actually just added support for prediction markets into Robinhood Social, and it's looking really good. As we progress throughout the year, I think it'll be increasingly obvious that active traders are at a disadvantage using any other platform. Turning to wallet share. Now, as a reminder, this is about transitioning from serving predominantly traders to serving all of our customers' financial needs. Two big strategic moves that we're making this year that I'm particularly excited about. The first one, we're calling it family investing. Robinhood should be better for you when more of your family members are on the platform. This year, it'll really become a multi-generational platform. Now, this vision really started with the credit card, which was our first family product. It continued with banking, which is also a first-class family experience. And in 2026, you'll see us bring it to our investing products. Our referral program for advisors is also going live this year, which will connect our customers to high-quality RIAs, which are powered by Trade PMR, to help them with their comprehensive financial needs. And we believe we can be the major beneficiary of the 100 trillion plus wealth transfer. And we've got some really exciting things to unveil coming on this front at our big event next month in New York City. So stay tuned for that. Second big thing, private markets. Now, you may have heard me say opening up private markets not only can resolve one of the greatest iniquities in capital markets, but also can be a huge accelerant to our mission as well as our business. This begins with Robinhood Ventures. And Robinhood Ventures, for those of you unfamiliar, will invest in private assets that are often out of reach for retail investors. And these will be packaged in registered funds that we can offer to US retail investors. I think this will be a transformative offering. Outside of the US, our customers in Europe got a little taste last year of private company stock tokens with our OpenAI and SpaceX stock token giveaways. More to come on that front soon. And now we think private markets could become even bigger than prediction markets. And I'm really excited about what we're building here. Finally, building the #1 global financial ecosystem. So the big theme here is tokenization. And it's early in the tokenization industry, but we've built a leadership position already. We now have 2,000 stock tokens available to customers in Europe. Now, a big part of 2026 will be seizing the tokenization opportunity, which we think is massive. And this means two things very specifically. One is permissionless 24/7 tradable public company stock tokens. And two, private company stock tokens, making them actually real and useful for customers. Now, our tokenization work dovetails quite nicely with our work on DeFi, which continues to accelerate. Over this year, we'll be launching and scaling Robinhood Chain, which is our layer 2, making it the best chain to trade real-world assets. More on this coming very soon. We'll be continuing to make improvements to Robinhood Wallet, which of course will also provide a first-class experience to Robinhood Chain. And we're also going to be bringing our centralized and DeFi products closer together so that we can deliver the best of both worlds to our customers. You also see us to continue to push into new geographies with several new international markets coming later this year. So before we go to Q&A, I want to share a little more about our progress with AI. So I went in earlier about Cortex, what we're doing to bring Cortex to our customers, both on the mobile app as well as Legend. But we've also made a lot of progress using AI internally. So when we began this journey a couple of years ago, it became clear to us that we should double down on two areas that we believe would move the needle the most from AI usage. And they are software engineering and customer support. AI customer support is really cranking. Now, over 75% of our cases are solved by AI, including the complex cases that previously required licensed brokerage professionals. And we've built a lot of this tech in-house. Now, AI and software engineering, this is an area where our goal is to be the best in the world. We've been focusing on making it as easy as possible for our engineers to get access to new model releases and new capabilities like background agents. We're continuing to see nice results. This year, we're continuing to automate and optimize the entire engineering pipeline, from writing code down to code review, all the way to deployment and testing. And this is already turning into real savings and efficiency gains, estimated at 9 figures in 2025 alone. And this is a big reason why we've been able to drive such high product velocity while keeping our costs down. And 2026 is shaping up to be much bigger. So in addition to CX and engineering, I'm pushing every team at Robinhood to integrate AI into their operations, with the goal of being best in class at AI across every function. Now, finally, I think it's worth noting that I started thinking about near-term progress we wanted to make on this vision last summer, and it's meaningfully changed since. The first draft barely had prediction markets. Robinhood Ventures became a real thing, as you know, Shiv, sometime around the second draft. And of course, AI continues to make progress at an accelerating rate, with models and agents getting more capable every day. And I think this shows you that our edge is really staying flexible and nimble. Now, I've been really proud at how fast we move at Robinhood. Looking ahead, you can really expect us to keep that startup hustle despite our large size. So, roadmap is full. There's so much to do. Let's go to some questions. Welcome back up.
All right. Thank you, Vlad. Thank you, Shiv. For the Q&A session, we're going to start by answering shareholder questions from Say Technologies. After the Say questions, we'll turn to live questions from our audience. So I'll kick it off with our first question from Say, coming from Matt S.
All right. Hello, Matt.
Hey, Vlad, how are you? Shiv, nice to meet you.
Good to see you. How you doing?
Good to see you. So my question is, any additional updates on Robinhood Social?
Yeah, Robinhood Social, very, very exciting. As I mentioned, we are testing it internally. We recently added prediction markets, which I think has made it clear this is not just a tool for ideas, but also discovery of new assets. I think one of the reasons why these products have not resonated super well when other companies have tried them is the diversity of content has been relatively low. But now you look at Robinhood, we have so many customers, we have so many assets, the diversity of content is actually quite high. So I think we're building increasing confidence that this is going to be a great tool for discovery and engagement. So marching towards public launch, I think you'll see that in the coming months, but we're pretty close.
All right. Thank you, Vlad. The next question I'll read on his behalf from Rohit P., who asks, what could be the reasons for the more than 40% drop in Hood's share price, and how is leadership addressing the downslope?
Yeah, great question. Maybe I'll start. We're really focused on the inputs of our business, and we love the inputs that we're seeing. You heard from me and Shiv, last quarter and really last year was a year of continued market share gains across pretty much everything. Net deposits of 68 billion through the year, 16 billion in the quarter, which means customers are increasingly trusting us with more and more of their assets. And as I look forward to the roadmap of the year, we've got a pipeline of new things that are either in relatively early stages of rollout, such as Robinhood Banking, or have yet to roll out, like Robinhood Social, Cortex Assistant, we think could be transformative. So inputs are looking good. And, you know, I've been through this old hat now as a public company founder and CEO for, what, 5+ years. And, you know, we've seen a couple of cycles up and down. We think that over the long run, the business performance tends to lead stock price. So the focus is just on building for customers, making the product better.
Yeah, couldn't agree more. We're focused on our customers. The one point I'll add is we also have over $1 billion share repurchase program, and during periods of market volatility, it's a really great time to lean into that program.
Yeah.
All right.
Well said.
Thank you for that. And then the last question from Say is from Luke D, who asks, what is your guys' plan on navigating the rough seas during this crypto downturn and the end of football season? How can we see Robinhood extend its roots to not be so heavily affected by these things?
Yeah, I mean, I'll start with what we're seeing in the product. So crypto, we're moving toward a world where crypto is actually more than an asset class, and it's a foundational technology that's going to underlie the trading of all assets. And you're seeing that with our efforts with tokenization outside the US, and of course the stablecoin partnership with Paxos on USDG. So my belief is that in the future, you'll see crypto and traditional financial services increasingly merge. And of course, people will talk about and trade Bitcoin and other assets, and we continue to be long-term bullish on those. But yeah, if we play our cards right, crypto will be a tool that is going to be important in giving customers what they need, and it'll connect customers to assets that have real fundamental utility. So we're still executing upon that, and you know we're not getting distracted by short-term fluctuations in what Bitcoin or other assets are doing. Prediction markets. I think there were questions industry-wide about what would happen as the NFL season comes to a close. But what we're actually seeing is surprising us. So in January, for instance, NBA contracts surpassed NFL in trading activity on our platform. And you're also seeing relevant non-sports contracts generating significant volume. For example, in the week after the NFL season ended, the government shutdown contract on our prediction markets platform was like driving significant volume. So I think over the long run, what you're going to see is, even though it's now largely sports, prediction markets is more than sports. As we continue to diversify the contracts offered on the platform and improve the customer experience and refine it, more and more contracts will continue to resonate with our traders. And that's not to mention this year is going to be a big year for sports as well. We've got the Olympics right now. We've got the World Cup later, and that's in addition to March Madness, the NFL season, and so many more things. So yeah, I think we're just the beginning with our prediction markets business.
Yeah, and on the business side, a couple of things I'll add. So as I mentioned before, we now have 11 lines of businesses that are doing over 100 million of ARR. So we continue to diversify there. On the crypto front, as Vlad said, we're long-term bullish, but it's important to remember, while we did close to $1 billion of crypto revenue last year, it was only 18% of our overall revenue. So we love what we're seeing, but more than 80% still comes from outside of crypto. And on prediction markets, as Vlad said, it's growing. We're diversifying across sports and non-sports and different asset classes. And while the growth rates are great, again, relative to our overall business, it's a smaller portion. So big picture, we're diversifying, we're keep shipping for customers, and we love both these business lines.
All right, thank you. That concludes our shareholder questions from Say Technologies. Thank you again to Matt for joining us live. Now we'll move to Q&A from our in-person audience. So we ask that each person who's interested in asking a question, raise your hand and limit yourself to one question. Alex, would you like to ask a question?
Yeah, thank you. Alex Markgraf from KeyBank. Vlad, maybe on the prediction markets front, with the close of the JV, can you give us a sense as to what the team is working on and from a product standpoint, outside of greater list of contracts, what we might expect this year?
Yeah. So thus far, if you've been watching closely, you've really seen us refine the down funnel trading experience, particularly with sports. So we've added more tools like combos and player contracts for traders that want to go deeper. We've also started increasingly leveraging our advantages, which are we have lots of assets on the platform. We can connect things together to show you related contracts contextually in the places where they matter most. We've also completely revamped search and discovery as well as home to make them multi-asset and include prediction markets. So one thing is, how are we going to show prediction markets contextually where it's relevant to customers across all of our app surfaces? Can we show relevant ones in the stock detail pages so that, if you're considering investing in an equity, you get the whole picture of, not just the options contracts, but also the prediction markets that are connected. So I think you'll see more of that. You'll see first-time prediction markets customers, which we're seeing an increasing number of people coming to Robinhood, not because they want to trade equities or crypto, but because they've heard of our prediction markets offering. They want exposure to that. So streamlining that. So if you're a first-time prediction markets customer, we not only make it easy for you to get into the product, but also make it so that we can easily cross-sell you to things like retirement or other products. And I think that's an area where we have a unique advantage being a super app. And you mentioned Rothera. I think Rothera is particularly interesting because it gives us vertical control over the entire experience. We have control over what contracts we can list, and also greater control over the pricing and economics. And our philosophy really with all exchange partners is, I think the exchange layer is increasingly going to get commoditized over time, just as you've seen it in kind of other asset classes. And what we'd like to do is optimize for the outcome that's best for customers. So we want to make sure customers get the best price, the best economics, the best experience. And I think Rothera is a big critical part of us driving that.
Great. Thank you, Vlad. Other questions from our in-person audience? Okay. We'll now go to our Zoom queue. So for those on Zoom, please raise your hand to enter the queue. And if you'd like to remove yourself from the queue, please lower your hand. Our first question comes from Ben Budish from Barclays.
Hi, good evening. Can you all hear me okay?
Oh, yeah, we hear.
Great. Well, thank you for taking the question. Maybe just following up on that last one on prediction markets. I'm curious, maybe a two-parter. Just curious, most recently, can you maybe talk about the mix between sports and non-sports? I appreciate you are quite optimistic on the outlook for non-sports over time, but most of the media would indicate that currently it's mostly sports. And along the same lines, just thinking about prediction markets, how are you thinking about incentivizing new users? It's been a successful strategy across the brokerage business, the IRA product. You definitely have some new competitors in this space that are advertising quite aggressively. So how are you thinking about that one as a way to attract people to that product? Thank you.
Yeah, absolutely. I think that recently, certainly our efforts have been on making the sports experience really good, but we've also diversified quite a bit. We've diversified into lots of non-sports offerings, and we now have thousands of contracts available. And I think you'll see us continue to make the experience there better in two ways. So one is just in the same way that we've done for sports, putting custom data and information and tools around some of these contracts so that customers can understand them. Then the second thing is surfacing them when customers need them and when they're the most relevant. And we saw particular success with that with the government shutdown and related contracts. So I think we feel really good about this actually progressing towards greater diversification. I think it'll be similar to the news. sports are a big part of the news. They bring people together, but there's all sorts of events that are going on a regular basis that customers care about and offer active traders trading opportunities. So I think you'll see it continue to diversify as time goes on. He asked another question, which I think was for you.
Yeah, it was how are we gaining customers and kind of activation? So a couple ways there. First, our huge advantages, as Vlad mentioned, are 27 million customers. So when we can surface things that are relevant to customers, that's a great way to onboard. The second is we're looking at new ways to activate customers. So you may have just seen we have referrals, for example. We have learn and earns where if you learn about the product, you can have a customer, your friend also join. So the team is continuing to experiment both at the top of the funnel and the mid funnel to see how customers can onboard. But as Vlad mentioned, we're going to improve the product. We're going to improve the onboarding funnel. And what we're seeing thus far is really exciting.
Yeah, and to put on my Shiv hat, we're going to continue to be very ROI driven and focused on the economics with promotions and marketing activities that we continue to do. I think when we enter new assets and new products, it's less of like just blowing out marketing right away, but making sure we get the product experience right, the economics work well, and then you've seen us get gradually but steadily more aggressive on the marketing front over time.
All right.
Great, thank you.
Thank you, Ben. The next question is from James Yarrow from Goldman Sachs.
Good afternoon, and thanks for taking the question. Can you hear me?
We hear you and see you. Looking good.
Excellent. Thank you. So you recently added Indonesia as a new market. I was hoping you might be able to expand a little bit on international expansion. Where do you see, or what are the best markets in which you're planning to invest? How do you compare and contrast the attractiveness of the opportunity set in those markets, and also the go-to-market strategy? And perhaps if you could just sort of maybe differentiate between Europe versus Asia.
Yeah, I mean, I think this year is going to be a big year for international expansion in the markets that we've already been live, namely UK and EU. You're going to see us continue to round out the product suite and respond to customer feedback, and also introduce new platform level capabilities that actually are more useful outside the US, but can scale to every country. So multi-currency wallets as an example there, which we recently introduced in the UK. UK recently also added stock and shares ISAs, which is the retirement wrapper there. So in that market, you're actually seeing us go deeper and start going into market-specific functionality, leveraging our technology platform. In the EU is interesting because it's a little bit different how we're thinking about it. The EU is a test case for what Robinhood could look like if it was built entirely on crypto technology, on crypto rails. So we don't have traditional stocks there, but we have stock tokens. So that's where we're really pushing hard on tokenization. And I think you should see that accelerate this year too, because admittedly, the first version of our tokenization offering didn't have significant advantages over holding traditional stocks. But once we unlock the power of DeFi, then you get 24/7 trading. You get the ability to self-custody your stock. So you're actually seeing the introduction of advantages that are very difficult to replicate using the traditional rails, and some of the disadvantages, like things that people care about, like protection and things like that, we're going to continue to remove. So I think by the end of this year, you'll get to a point where the tokenized offerings are better than the traditional offerings, which is going to be really exciting. And we're going to continue to close the gap with other offerings in the EU as well. And then turning to Southeast Asia and the rest of the world, you'll see us launching in several new markets. And with each new market, you should expect less time bringing up core features, because we've spent time working with the regulator and also building these things with international in mind. It should be much quicker to ramp up in each market than in the first few. Similar good example, we didn't launch retirement in the US until, 2022? Well, in the UK, it's much sooner to add the local retirement wrapper after launch. So you'll see that continue. So where we now 750,000 international customers. Yeah, I think you'll see that getting into the millions relatively quickly. And like I mentioned earlier, before too long, we'll be looking back and we'll say, wow, this business scaled much faster than we predicted. So we feel good.
Awesome.
That's really
All right.
helpful. Thanks a lot.
All right. Thanks, James. The next question is from Dan Doloff at Mizuho.
Hey, Vlad. Hey, Shiv. Great
Dan
results.
Dolev.
Congrats.
Good to see
How
you,
are
man.
you? Thank you. Thanks for having me. Great results as always. There's been some news today that have hurt some of your competitors on the impact of AI. And like, I'm scratching my head. I'm thinking, isn't Robinhood sort of the best AI company out there? Why aren't these things are actually huge tailwinds for you?
Well, I think they are. So if you look at, and I think AI is going to completely transform all aspects of financial services. On the trading side, we have the bets that we're making with Cortex on Legend and also Cortex in the app. And we also think, and by the way, Cortex Assistant, which is the AI assistant that's integrated into Robinhood, is rolling out in the coming weeks. So we're refining it internally, and that's like going to roll out to customers very soon. In terms of AI and advisory, two things there. I think you're going to see a lot of transformation in the industry. One side of it is going to be amazing self-serve tools, which is giving you an advisory-like experience, but where the individual user is calling the shots. The second is the workflows of an actual human advisor are going to be redefined and streamlined, and they'll be able to service more customers at dramatically lower cost. And we've got efforts underway for both. Actually, in the first one, Cortex providing advice to customers, we've started having conversations with regulators about how to bring that safely to customers. And we've got the technology to do it. Cortex has made tremendous progress. So it's just a matter of making sure that rolls out safely. And, we think it has the potential to transform the wealth management industry.
Great stuff. Thank you so much. Great results.
Thanks.
All right. Thank you, Dan. The next question is from Steven Chubak from Wolf.
Hi, good afternoon. Thanks so much for taking my questions. So you'd mentioned underwriting to strong ROIs when building your expense plan. Is there anything we should infer about the level of revenue growth that you're budgeting for when building the plan? And just how much flexibility you have in the model, given your commitment to achieving profitable growth and also significant inroads that you've made in embedding AI to drive greater efficiencies over time?
Yeah, great question. Thank you, Steve. So a couple things I'll point to. First, our mantra is still profitable growth. We are a growth company. We're going to continue to invest for growth. We're seeing great things from our customers. So we're going to keep doing it profitably. So I think you can infer that from us, that means very simply, we expect revenue to grow faster than expenses, and that's how we build our plan. In terms of the ROI, we underwrite each thing to a good ROI on a standalone basis. So if it's a new product, we look at what is the long-term IRR, what can the margins be, and now more importantly, can it scale? It used to be, hey, a $10 million business moves the needle. Now can this be a $100 million business in a few years? Those are just a couple of things we look at. Every time we do marketing, we look at both the payback periods, the incrementality, and make sure that those are also good investments. To your question on can we stay nimble? Absolutely. We're a technology company at heart. About 85 to 90% of our costs are fixed. So this gives us a lot of flexibility. But big picture, we don't want to oversteer. And so what you're going to see us is keep investing for growth. We love what we're seeing. And if anything changes, we have our hands on the wheel. But otherwise, we feel great about the plan that we built.
That's great color. Thanks for taking my question.
All right. Thanks, Stephen. The next question is from Devin Ryan at Citizens. Okay, maybe we go to the next question.
Almost there.
Yeah. All right. Patrick Moley from Piper. You're up.
Yeah, can you hear me?
We hear you.
All right, great. Thanks for taking the question. I had another one on prediction markets, but I was hoping you could put a little bit more meat on the bones around Rothera. We estimate that you could see a 45% bump in economics if customers utilize contracts that are listed on your own venue. So could you just talk about some of the puts and takes there? Why not migrate all of your prediction market volume onto this JV over time? And what are the benefits that you see in continuing to partner with other prediction market venues? Thanks.
Yeah, maybe. I don't know if you have a comment on the economics, but I'll just tell you our primary North Star is how to deliver the best product experience to our customers. So we do anticipate that a significant portion of our volume will move over to Rothera, but that's not sort of our North Star. Our North Star is giving customers the best pricing, the best experience. And on the brokerage side, you've seen it with crypto. Now that we have Bitstamp, you've seen it with how we route orders on equities that we prioritize execution quality, making sure customers get great execution. So I don't think that's going to change depending on the asset.
On the economic side, so the way it works is customers today pay 2 cents. 1 cent goes to Robinhood as the FCM, and then 1 cent goes to the exchange. When we have Rothera, we then control the full unit economics. I think your 45% number is referencing that we own 45% of the JV, Susquehanna owns 45%, and MIAX owns the other 10%. But the nice part is, as Vlad said, we'll control the full product stack, and we'll control the full monetization. So there's a lot of leverage you can do with that. You can give more value to customers. You can improve the unit economics. So we're super excited to get it online, both for the product experience, but also for the monetization as well.
And by the way, we're also going to be open to other futures commissions merchants and other counterparties connecting, and we'll be competing for that business. Not just providing an additional execution venue for our orders, but we'd like to build a compelling market for getting other firms access to our marketplace.
All right, great. Thanks for that.
All right. Thank you, Patrick. The next question is from Evan from Stock Market News.
I appreciate you guys for letting me ask the question. Congrats on the fantastic quarter, as always. I want to ask you guys a little bit more about Robinhood Social in 2026 and kind of how you guys view targets and stuff there this year. And also if you view that as like an international segment or something you're really focused on the US first. Thank you.
Yeah, that's a great question. I think with this product, since it benefits so much from a dense network, and we want to make sure that the product experience works really well and is integrated nicely into the rest of Robinhood, you'll likely see us launching and scaling it in the US before international. But over time, I think you'll see it coming international as well, particularly as the translation technologies get better and better, and you can have international customers benefiting from English content in the US. So you should expect it to come into international as well, but I'd expect the first for the first period of time to be iterated on in the US.
All right. Thanks for your question, Evan. The next question is from David Smith with Truist.
Hi, good afternoon.
Hello.
Institutional volumes on Bitstamp saw a nice pickup in the fourth quarter, even as retail volumes declined from the third quarter, like Robinhood app volumes. Could you comment about how you're expecting that institutional retail mix to evolve over time, given your plans for the product offerings, and any thoughts on pricing across both retail with the app and Bitstamp, as well as institutional pricing? Thank you.
Yeah, maybe I'll talk about the exchange. You can hit pricing, Shiv. Yeah, we've been really excited about the growth in Bitstamp. I think that team has been cranking, and as we've integrated, we've actually seen an increase in market share, an increase in revenues and business performance, which I think is relatively rare for acquisitions. And I think what's going on there is, when we first started talking to our institutional customers, I remember I was at a lunch around the time of our CAN event to catch a token. And, they had some fairly basic complaints. They were like, you're dropping our packets on the exchange side. Or our biggest request for an improvement is just making sure that all of our packets are properly processed, things like that. So, low-hanging fruit on just exchange resilience, reliability, how many transactions per second the matching engine can process, has been huge. And of course, we've got plenty more of that coming. And one benefit we have to bear, which is our retail offerings, is very attractive to institutions. And we have a great recipe for bringing in the retail volume, which in turn makes it more attractive for institutions to quote and make markets on exchange. And this is before all of our efforts to bring our tokenized offerings, which of course Bitstamp will be a big part of.
On the pricing side, a couple of things I'll point you to. On the retail side, one big change we made last year is we moved to smart order exchange routing, which really means we want to be competitive for all types of customers. What we had found out before is for the most competitive customers, we actually need to lower pricing. And so that's what we did. And now we have the volume tiers. And you saw a little bit of this in Q4, where there was less market volatility and the casual trader stepped away, but we saw really strong engagement from the more active traders. And because of that, they're on the higher tiers, and this pricing come down a little bit. For us, we don't goal the teams on pricing. That's an output metric. We goal them on market share, and we're continuing to win market share there. And so what we would expect is during periods of lower market volatility, you'll probably see more active traders engaged, which will bring down their overall take rate. And that's what we saw a little bit in Q4. And just give you a little bit of color in January, to start the year, we're about 5 basis points lower relative to the average rebate rate we saw in Q4. And again, that's just due to more active traders being engaged relative to the more casual trader.
Yeah, and another thing that I didn't mention, but which we're very excited about, is the growth and scaling of our perpetual futures offerings outside the US. We've really continued making that product better and better, giving active traders access to better tools and more flexibility on the leverage. And we're getting really good feedback. So I think you should expect more things in the perpetual futures department this year.
All right. Thank you very much, Vlad and Shiv. The next question is from Brian Bedell with Deutsche Bank.
Great. Thanks very much. Can you hear me okay?
Yes.
Awesome. Great. Maybe just back to prediction markets. Vlad and Shiv, what is your appetite for launching contracts in fundamental equities? So things like on KPIs and other earnings metrics that you could potentially link in with your equities trading business. So like an active trader experience that would also have a layer of fundamental investing as opposed to the other contracts. And then just on timing of Rothera, any info on more sort of precise timing on when you might launch that?
Yeah, sure. We're very interested in the potential to list more prediction markets around company KPIs and fundamentals, because obviously people come to Robinhood and they're one of the big draws is we think we're the best place to invest in stocks. So the more we create an ecosystem of information and products around individual stocks, I think the more useful that'll be with customers. And we have some company-related prediction markets already. You could see, for example, Tesla deliveries and things of that nature. As far as like financial KPIs, I think that's an area where we need some regulatory relief. So we're continuing to have conversations about that. But yeah, right now, like, not to get into the gory details, but some of these could fall into securities-based swaps and be under SEC. So there is some ambiguity and relief needed in order for us to list those.
And then on the Rothera piece, our goal is to get it operational. It actually just closed last week, and we're targeting by middle of this year. So stay tuned.
Great. Thank you.
All right. Back for a second shot at this. Devin Ryan from Citizens.
All right.
All right. You guys see me now?
Yes, we do.
Okay, good. Hey, Vlad. Hey, Shiv.
Hey, Devin.
Another AI question. And the question is really combining tokenization, kind of instant settlement 24/7 with AI. And I'm thinking like the future agentic AI, where it would seemingly allow for kind of exponential scaling of trading volume from here, maybe micro lending, a lot of other applications. So it'd be great to get thoughts on how you see tokenization and AI coming together. What do you think the time frame for that to happen is? And then what does that mean for Robinhood? It would seem like you guys are really well positioned, but I see it as like something that could exponentially change transaction activity. Would love to get your thoughts as well.
Yeah, I mean, what I'll tell you, one of the compelling reasons why we're interested in tokenization outside the US and actually unlocking access to DeFi for our stock tokens is that it makes it easier and more interoperable to write agents and have software that integrates with these offerings, because there is a robust ecosystem of developers that are integrating with these blockchain protocols, and actually, you could argue the integration on the blockchain side is much easier and more streamlined than the typical like API integrations with brokerages. So I think that's going to be exciting to watch. I think it's a little bit early to proclaim that like a certain chain or a certain crypto will become, the way that AI agents communicate and pay each other. But I think if that does happen to be the case with the tokenized stocks offerings, and also as we go live with our stablecoin partnership with Paxos, we'll actually be really well positioned to do well and compete for the agents business in that world.
Great, thank you.
All right, thanks, Devin. The next question is from Roy with Crossroads.
Roy.
Hey guys, good to see you. Thanks for having me. My question was on international expansion as well as Rothera, specifically as you're rolling out internationally. I'm kind of curious how you prioritize which products to initially launch, and is there a potential scenario or market where we see predictions markets being the first?
I thought you were going to ask me about that 50% direct deposit attach rate on our banking offering. You want to know about international prediction markets. Yeah, so right now prediction markets for us are US only. And I think, we're in an interesting position because, as I mentioned, in the EU, we have like crypto powered Robinhood on crypto rails. And we also have the ability to scale our traditional brokerage business outside the US. So in addition to like traditional prediction markets ex-US, there's also the possibility of rolling out on-chain versions. So that's something we're looking at. I think you should expect some movement, but we don't have anything concrete to announce there.
Thank you.
All right. The next question is from Ramsey El-Assal from Cantor.
Hi, guys. Thank you for taking my question this evening. I was wondering if you could comment a little bit further on the push into private markets in terms of the asset types that will be available through your platform, and also any color on sort of timeline and or regulatory or operational hurdles you need to get through to field those products. Thanks.
Shiv has been running this product in addition to being CFO, so I'll let him speak to it.
Yeah, no, thank you. We're super excited about prediction markets. Big picture, we're in the quiet period for our first offering. Our N2 is publicly on file with the SEC, so we can't say too much more than that, but we're really excited to get this out for customers. When you look at the vision, the goal is that any private assets that have not been traditionally offered to retail, you should be able to offer in these 40 Act registered funds. Chairman Atkins came out recently and said these are the best vehicles to offer access to retail. And so you're going to see us to continue to push there. If you look at our filing, it gives us kind of broad capabilities to do that. But in general, these funds, if you look in the market, hold all types of assets. It can be private equities, it can be real estate, it can be credit. And so as we think about them, we think about what are our customers looking for? What are they most engaged in? But over time, you should see us be able to offer all of these asset classes. So stay tuned, and we're super excited.
Thanks.
All right, thank you, Shiv. The next question is from Ed Engel from Compass Point.
Hi, thanks for taking my question. How are you thinking about the opportunity around Trump accounts ahead of their launch this year? Have you heard anything about how these could be structured, or whether Robinhood could even play a special role here?
Unfortunately, I can't share too much of the details of what we heard, but we've been involved in this effort from the very beginning. We were part of the first summit on Trump accounts at the White House, and I've made it clear to the administration, to the president personally, that I think this is a game-changing initiative. It's really one of the few initiatives that pretty much everyone agrees on, regardless of where you lie on the political spectrum, and is very in line with our mission of making sure everyone benefits from our financial markets. So yeah, from the very beginning, we've said, if we're fortunate enough to play a role, we will give our best people to make sure that this effort goes as smoothly and it's as high quality as possible, because I think it being really high quality and being done with sort of like exceptional engineering is going to be a big part of its success. And I think the administration has done a really, really nice job with the rollout. There was a nice Trump account summit just a couple of weeks ago, and you can tell with all the folks making contributions and donating large amounts of money that I think the future of the program is incredibly bright.
Great, thank you.
All right, thanks, Ed. The next question is from Ken Worthington from JP Morgan.
Hi, good afternoon. Nice seeing you all. Can you talk about your use of promotions and how that's evolving or expected to evolve in 2026? Is the size of the promotion budget expected to be bigger or smaller this year than last year? And as we think about 2026, does asset growth remain your focus, or are there other customer behaviors that you really want to prioritize?
Yeah, I can start with this one, Vlad. So first, on the promos, as we've said before, we really love the ROI that we're seeing, so we're going to continue to use them. One thing we're doing this year more than last year is we're making them more personalized. So the great thing about having phenomenal engineering is using AI and ML models, you can actually make it much more personalized over time, which is great for customers, but it also is a great ROI. In terms of the overall relative to last year, it was about 25% last year, and I would expect it to be roughly in that zip code for this year again, as we continue to make additional investments. Our top KPIs remain the same. It's market share for active traders, it's net deposits and gold subscribers for wallet share, and then it's NFAs and institutional accounts for our third arc. One thing that we've been focusing a lot internally is, in addition to growing net deposits 20% plus year over year, how do we really accelerate top of funnel growth even faster as well? And we have a lot of great ideas there. So our focus is going to remain the same, but we're going to keep investing. Vlad, anything you want to add?
The one thing that we didn't mention, or just sort of flew under the radar, is the market share growth. We've really had really strong results that have exceeded our expectations. Those of you who may be looking at the latest 606 reports probably noticed that the 606 reports show that looks like we become number one in options industry-wide, which, business goes on, but I thought it was just a good example of how the team's relentlessly making the experience better.
Thank you.
All right, thanks, Ken. The next question is from Amit at Amit is Investing.
Hey, Vlad and Shiv, can you guys hear me?
Yes, hello, sir. How you doing?
Okay, congrats on a great quarter. Thanks for taking my question. My question's on banking. How do you guys see this expanding this year as you begin rolling it out? And I guess, where do you think the flywheel takes place as more people bring more of their assets on? I know you guys are giving a very competitive rate on the savings APY. Can you speak to a little bit more of the business fundamentals and what it can do to further expand and diversify the business as banking rolls out?
Yeah, absolutely. Yeah, so banking has gone off to a very strong start. You've heard us say, over 400 million in in assets on the platform. More than half of the people that fund end up funding with their direct deposit, which is pretty amazing attach rate so early in the product's life cycle. And we recently rolled out an increase to the rate that we offer on deposits, so 3.5% APY. I think what customers really appreciate about this offering is for customers that trust us with a significant portion of their assets. So if you have $100,000 or more across all Robinhood products, the experience on banking, the intent is for it to be flawless. So what people love is for those customers, we give you the APY, not just on savings, but also on checking. So not having to worry about, moving money around to optimize the yield and, having enough in checking to pay your bills, I think has been a huge pain reliever for customers, along with all the premium features like cash delivery in the markets that's gone live. Really, really positive feedback. In terms of ecosystem benefit, we always look for how to integrate our products together. And I think we've been able to do that with the banking product, even though it's actually in a separate app, which has been pretty interesting. The fact that you redeem to get the 3% cash back into brokerage has provided a very strong and durable link between the two products. And moreover, a bank account is actually the one prerequisite, well, more or less, there's other ways to fund your account, but by and large, everyone that opens up a Robinhood account has to have a pre-existing bank account for them to move money in and out of. And so by sort of like offering them that experience in-house, we can make it even more seamless with the ability to budget better, set goals, move large amounts of money between the accounts seamlessly, and allowing customers to have access to the industry-leading APY without leaving the platform and bucketing it as a savings account separately, which I think is resonating. So you should see us continue to double down on that. The integration points will be thoughtful and very, very clear. And the banking team's got some aggressive goals. We think we can grow this thing.
On the flywheel piece, it's super simple. The more net deposits you have on Robinhood, the more assets, the better your experience is. So as Vlad said, if you have the $100,000 tier, that's across all of your different assets, you get even more value. Customers bring even more assets. We continue to give them even more value. And we're seeing that across all of our products and in particular with banking. So super excited to give customers another way to trust us with their assets.
Okay, thanks for your question, Amit. The next question is from Michael Cyprys from Morgan Stanley.
Great, thanks for taking the question. Just wanted to ask about tokenization. If you could update us on your partnership on the stablecoin side, how you see that ramping and contributing, what are some of the milestones here in 26? And then more broadly on the tokenization of real world assets, maybe you could speak to some of the steps you're taking, including across private markets, how you see that contributing, including in the US, to the business over the next 12, 24 months versus, say, looking out over the next 5 years? And what do you see as some of the key hurdles to adoption?
Yeah, I'll field that one, Mike. Thank you. So I think we have pretty good confidence that tokenization of private markets is going to be very powerful and highly resonant outside the US. And it would clearly work very, very well inside the US as well, pending the hurdles around accreditation and all the other things, crypto market structure. When we were running our stock token giveaway of OpenAI and SpaceX in the EU, we saw that it resonated with customers. And remember, this is just it was a giveaway. It was relatively small amounts of these companies, and they were not tradable. But even so, you could tell that there's a hunger among the retail customer base for exposure to these private companies. So a big part of this year is figuring out the path to offering a compelling product for private markets, both in the US with Robinhood Ventures and overseas through tokenization. And just making sure we work with our regulators to offer these products safely and in a form that
resonates with customers. But where early signs are that if we unlock it, such a differentiated offering, there's really no other place where you can get it at scale through a reputable, trusted financial institution. So if we can unlock that, it's going to be very differentiated and draw in a lot of assets.
All right. Thank you, Mike. For our last question, last but certainly not least, Tanner from Future Investing.
Tanner.
Hey guys, thanks for having me. My question was just regarding broader capital allocation strategy for you guys for international expansion. Are you guys planning on essentially going after those licenses yourself as you enter new regions and countries, or do you want to acquire to enter and expand into new regions?
Gosh, I hate not answering Tanner's question, but it's capital allocation, so I think you have to take it.
No, we partner super closely on capital allocation. I think the main point is it'll be both. There will be some countries where we will do it organically. You saw that in the UK, you saw that in the EU. There'll be some countries where we are accelerate by going non-organically. For example, Wonderfy, our Canadian acquisition, which hasn't closed yet. And there'll be some companies where we'll do both. And so for us, we want to be able to serve customers in every single country. What we look for is what's speed to market and what's the best ROI. And then we're kind of indifferent to which way we get there.
And by the way, one of the first books Shiv recommended to me was The Outsiders. So if anyone is looking for a good book on capital allocation, that was a nice one. Yeah, I think what I've said in the past around this is we don't want to get into the business of stapling platforms and doing these like massive infrastructure integration projects. I think if you've seen what has happened in the past to our big competitors, that's sort of like what has ground them to a halt. Not to say we won't continue to make acquisitions, but I think the acquisitions you've seen us make currently, it's great assets, great teams with complementary technologies that we don't already offer in-house. Example being, Bitstamp, which has gone smoothly. So I think where you get into trouble is if you just get like a duplicative stack and then you end up spending years integrating. So we're very cognizant of that. But yeah, otherwise, we're continue to acquire. We're going to continue to make our core platform better and internationally scalable, and we'll have both paths available to eventually serve customers in every jurisdiction.
All right. Well, that concludes the Q&A portion of our call. Before we end the call, I'd like to pass it back to Vlad or Shiv for any closing remarks.
Just want to welcome Shiv, and again, thank you for all the engagement from the entire community. Not just sell side analysts, but also buy side and our finance content creators. 2025 was a big year. 2026, we're definitely not getting complacent. There's so much to do. The roadmap is full, and the team is just cranking because we see a unique opportunity to become the primary beneficiary of the 100 trillion plus wealth transfer. So brick by brick, thank you for being with us on the journey.
Did you hear that? That was a little endorsement to emit right there, brick by brick.
So Tanner and I did have our video on. It didn't end up.
Yeah, I saw in the comments. Did they not have us up?
They didn't have you and dude. I don't know. They didn't let people see.
We're not
us.
representative of the company's vision.
They're obviously saying Roy is the best looking out of all of us because he got to be up there. So
I think it's more that once you get to a certain size, like you guys and Evan, they just can't show your faces anymore. Me, I'm a little guy, so why not? By the way, my favorite part, like legit, there's some amazing things from the call, but my favorite was Tanner going last. Tanner's question being late, if I dare say. They know the meme. They fully embrace it. Well played.
I raised my hand super early. What's so funny is I started to panic because they made me a panelist, and then I was sitting there and I could see myself in the camera, and I was like this. And I was like, I look fucking crazy. So I had to try to rush why I got up. I was like, I need a stand or something. Like, I need to put my phone down. And then they didn't even put me on screen anyway.
I'm happy they didn't show my picture because my Zoom on this laptop is a separate laptop. Does anyone have the zoom where the zoom zooms in? Like if I go here, it moves. Like it's not as okay. My zoom is stupid. I need to know how to fix this.
It didn't do
was
that
like
though.
it shouldn't, right? But
It
it
didn't.
zoomed
From my view, it didn't move. The camera didn't move.
Okay.
Yeah,
Good.
good.
Well, on my computer, it was, and I was just like, dude, I'm gonna be moving all over the place if I. So. Well,
Yeah.
regardless.
No, I think you looked good on camera. But I saw from the comments because I wasn't actually looking up on screen. I guess they didn't even put us up there. That's funny.
I was gonna ask about the Trump accounts right before someone else asked,
Mhm.
and I'm happy someone else asked because Vlad was basically like, I can't say anything about it. I was like, oh well, happy my question wasn't wasted on that shit. But
Yeah.
You know what's so funny is I'm so focused on just getting my question out there. I didn't even hear their answer.
No.
I
Yeah.
have no
So
clue what
like,
he said. I got to go back.
yeah. Likewise, like the Q&A stuff. Like if you guys are ever on this end, I mean, it's probably different because like that guy, like you're powered by AIP or something. But yeah, I'm so focused on my question. And I'm like, oh, that just got asked. Let me go to my backup. Oh, my backup. I missed some of the answers. But the one thing that was very clear in the question and answer period, this is still very much a product focused company. When Robinhood, and it'll probably be like many, many years in the future, maybe Vlad moves on to other projects, and it starts being focused not on products, but instead just increasing margins and incremental gains. Still important, but that becomes a focus. That's when Robinhood really starts to decelerate. But yeah, they're accelerating into 2026. They see a lot of opportunities. I mean, they have a very clean balance sheet as well, and like product after product, they're killing it. So yeah, this was really exciting.
Yeah, I really wanted to say great quarter, but I just, the stock's down. So I had to like, no,
I said great quarter. I said quarter like in a weird way. Apparently, everyone was trolling how I said quarter. I don't know how I said it, but yeah. Anyway, look, the biggest takeaway from this is everyone is obsessed with prediction markets. I mean, literally 90%, right, Neil? 90% of the call was, I think the street is like, this is the fastest growing part of the business. We think you guys can make a prediction market out of literally every single thing on the planet, not to mention the stock market. Will Cloudflare beat on this? Will Spotify beat on MAUs? And all of that volume is akin to people buying or selling options with potentially a better take rate. And if that scales, then this is going to become $1 billion business pretty soon. Right now, it's at like 300, 400.
Yeah, I mean, the big part of the call was one after the other, prediction markets. Now, look, I'll be honest, I've been skeptical and I'm still skeptical about the fact that you put investing and prediction markets, aka betting markets, in the same app, same interface. Some people I've seen in the comments say, look, if I wanted to invest in a gambling thing or a betting thing, I would go with Win or MGM and things like that. And I'm like, why? Like, if you were looking for a gambling or betting, why wouldn't you take Robinhood? Like, maybe people need to look at Robinhood as, okay, it started off investing app, things like that, but it is now becoming, they want to be the super app, whether it's super app of finance or super app of everything money-wise. You have to look at Robinhood in a completely different way. Yes, I agree. Investing in gambling should probably not be in the same interface, should not be in the same thing when you open the app. I agree. From a business perspective, or investor's perspective, I mean, if it works, it works. If it makes a lot of money, it makes a lot of money. And at the end of the day, if you don't like it, just use SoFi or use something else and you'll be fine. But
also, once again, there's a reason your iPhone is made in China. I don't want to get too philosophical here, but for everyone who really has this moral concern, there's a reason your iPhone is made in China. And no one seems to complain about their iPhone every day when they're using it. So again, India, and your clothes at H&M are made in Bangladesh. That's why you can pay $20 for a t-shirt. Like, I get the moral concern. And if you really have that, then you don't own the stock and use a different brokerage. But at the end of the day, if we're going to bring up morality into every single investment, I mean, it's going to be very hard to make an investment.
No, and the fact is, they release a product. If people didn't like it, it wouldn't be successful. Fact of the matter is, it is extremely successful, which means people like it. So I guess blame the people.
Yeah.
So there was one other thing that was really interesting to me. This is the second time that they've mentioned becoming a platform with something. So the first was the Robinhood chain. specifically tokenization. They talked about being a platform, allowing other developers to use that. And now with Rothera, their predictions market platform, likewise, they mentioned that as well. So I'm curious if you guys think that that's a pivot that's just inevitable, or do you think that maybe they just won't see a lot of take rate there, and it's just a continued push by Robinhood as they launch other products to actually build a platform that brings others in?
Say that again.
What exactly is the question? Yeah.
So with both the Robinhood chain that they announced like 6 months back, and now with Rothera, this predictions market platform, they've mentioned that it's a platform that they're inviting other developers and other companies as well to come in and have conversations and actually offer the, I guess, predictions specific to a certain type with this. And then with Robinhood, with the Robinhood chain specifically, and the tokenization that's happening there, they offer that as well to developers. So I'm kind of curious, like, this is not, Robinhood's very, just regular consumer focused for the most part, a little bit of institution. This is kind of another layer. I'm kind of curious if you guys think that that'll become meaningful at some point, and if that focus is intentional.
Well, I think there's going to be a lot of vertical integration. I think it just allows them to play more on pricing. I don't know how or like what the vision for Robinhood chain is going to be long term, but I'm sure owning the full stack is going to allow them to control the pricing a little bit better. Like, obviously, Robinhood likes to try to offer the cheapest services, but yeah.
Yeah, I think when they roll out tokenization, that's when the chain is become or expand tokenization, I should say, across the entire world. And, that's probably why they're getting into Indonesia. And I think Vlad said Europe was a test case to see how they can expand to Southeast Asia. So that'll be important for the overall chain to grow. I think the banking response Vlad had was pretty good about how they think that flywheel will continue to generate more assets. Again, prediction markets, they touched a lot on. I guess the elephant in the room is what happens if we have a crypto winter or like a really, 5% return year on the S&P 500 or something, right? Where volatility is just not as high. And, they said a couple things again. Number one, Shiv said crypto is only 18% of revenues and is declining, which means the rest of the business is diversifying. Number two, they said that they are number one in option market share now.
I don't necessarily think that was, it's 18% because it collapsed, not because everything grew around it. I mean, they did, but like if crypto fell to zero and we didn't end up seeing $300 million of revenue, can they come out and be like, dude, crypto is 1% of revenue? Why does everyone care? It's like, well, because last quarter is 30%.
Well, but like even before the crypto drawdown, they were diversifying away. I think it was 22% prior to this quarter report. So
it's a fair point though, Tanner. It's a fair point. Like crypto obviously is still, they can't ignore it, right? And so they have to figure out a way to expand beyond it. But they're taking number one share in options, which to expand. I mean, like, look, at the end of the day, if you think the stock market is going to be flat all year and volatility is not going to be high, which given this is Trump's market, I would doubt that would be the case. Robinhood's going to have a flat year on transaction volumes. If you think the flywheel will work, they're going to get more big accounts on the platform. Those accounts are going to trade. Prediction markets are going to scale dramatically with all the World Cup, Olympic sporting events, and crypto doesn't completely, Bitcoin doesn't go to zero or something this year. Then I think transaction volume should normalize. Now, maybe it's not massive growth, which is why maybe getting back to 150 is not going to be that easy, but it also means going back to $30, like people are saying, not be the easiest.
I mean, quarter over quarter, total revenue is flat, despite crypto coming down. So clearly they are diversifying, which a lot of it does come from the prediction market stuff. But yeah, if it continues, then I agree, it is going to be an issue in the short run.
Yeah, I agree. Roy, if you got a dip, you can get out of here. But thank you for joining Roy's YouTube. I'm putting in the chat. If you are not subscribed to him on YouTube, please make sure you subscribe. And we appreciate it, Roy.
Thanks, Roy.
Yeah, last thing, thanks for having me, guys. If you guys are on my channel, you're not following these three incredible minds, actually, they're worth a follow. Take care.
Later.
I think that this is crazy, dude. Here, wait, let me just
put markets
growth rate on it. Yeah, this is prediction markets, and like there's other things baked into this other revenue as well. But mostly prediction markets right here. And it's
Wait,
just
so this is, hold on, what are we looking at? 147 million?
other transaction-based revenue.
Oh, so that's not only prediction markets, but probably a
No,
majority.
but highly prediction market-based revenue, and it's what's leading the big growth here. But yeah, this already is clearing equities. Equities this quarter was 94 million. And last quarter equities was higher than other transaction-based revenue. Now it's, nearly 50% higher than equities. So it's that's only going to widen too, like especially with Olympics and all the other sporting events that we have going on and World Cup and all that stuff. It's only going to further their their revenue base there.
At the start of the call, they told us with the prediction markets, customers have already traded over $4 billion so far in 2026. We know it's 3.4 billion in January, which means that in 11 days, they have done over $600 million in February.
Hold on, is that $3.4 billion or contracts?
It's the same thing. $1 is a contract. But they make 1 cent off of that.
No, but $1 is not, a contract could be less than $1.
No. Why?
Oh, I see what you're saying. No, I get you. Okay. That makes sense. Yeah. All right. So
they make 1 penny off of all of them. And then with this new JV, they might make up to 2 cents, or maybe they cut the prices.
Okay. So that's what I want to talk about. The JV. So did people catch when Shiv said, we are trying to go after the entire 2 cents?
Yeah.
He was very
makes sense.
He was very explicit saying it might not happen in this quarter or the next quarter, but he said the 45% JV that they own with Susquehanna, even though they only own 45% of it, they control the entire monetization of it. So the revenue will go to Hood. Susquehanna has their equity stake. They're probably going to get something around the market making. But if that happens by the end of the year, I think that's why the analysts were so excited about this, because then that doubles prediction markets this year.
It doubles it, or they compete on price, and then that's the only thing that I also think that they might do, because Robinhood is definitely known to compete on price and sort of do that, cut the price in half and try to quadruple the total amount of volume.
The question now is, what happens with Kalshi? Because a large part of the volume is coming from Robinhood, based on what we've been hearing. So what happens with Kalshi as a platform when Robinhood fully diversifies away? Because it will still offer Kalshi on its platform. But eventually, I assume that Robinhood would like to get the full pie.
It's going to be quite interesting to see. I mean, Kalshi is number 3 in the United States right now. I mean, that's probably the fastest growing startup on a B2C basis in the country in finance. So I think they're going to be okay. They're worth 11 billion. Robinhood's worth 80 billion. I don't know. I'm not privately invested in it, so I don't care too much what happens to them, but time will tell to see if the entire contract expands. I think, again, going back to I saw a lot of concerns in the chat about prediction markets as a gambling tool. I think there is credibility to the concerns that this should not be offered on the platform. The retort to that is, I think Hood could give you a toggle to turn it off if you really don't want to see it, number one. And I think that's something they could introduce. Number two, again, if you really don't want it, are you going to leave Hood? And I've just seen very few people say, I'm literally leaving because I'm so upset about this. And again, if you are, that's fine. You have your right to do that. I just think Vlad is also thinking like a businessman. He's like, the majority of people are not going to leave if we allow prediction markets. And then the other thing is that this is an emerging asset class. Like, you kind of can't, if Robinhood wasn't going after prediction markets, imagine what would happen, right? This is something that is growing. It's growing massively. We know that Hood is a product-focused company. There are people that want to, just like, I mean, like, again, I hate bringing this argument up, but like, should we get rid of 0 DTE options? Should we get rid of weekly options? It's like, no, there's a market for options. People trade them. People sell them. People use them to hedge, generate income. If you're so philosophically against it, you can't be on any broker, because every broker offers derivatives. So this is just another financial asset class that might feel degenerate to a lot of people, but so is buying NVIDIA 195 calls for this week. But we can't ban that.
Yeah, I don't even understand the qualm. You can buy a myriad of different casinos and gambling apps right now. Like, you can you know, go buy Caesars Entertainment or DraftKings or something like this. Like these are all available. If you don't want to participate in that, you feel moral qualm, sell your shares. If you feel moral qualm about having it on your platform, you can DM them right now and they'll pull it off your platform so you don't have to see it. And if you don't care, like 99% of people, then, you know,
move on. I feel like people are complaining. This is why I brought up the point about your iPhone. It's like your iPhone is built from people making 10 cents an hour in China, and you seem to have no issue. So is your Pixel from Google. But you go on without your life, right? And that might be a paradox of capitalism, but taking it out on Hood for prediction markets, but not every other thing that results in your life being able to function the way everything. I mean,
NVIDIA's suppliers of Foxconn put up, nets to catch people from jumping off the roof because their work-life balance is that bad. Like, I mean, it's everywhere, you know?
I mean, Vegas hotels don't let you open windows for a specific reason. So,
yeah. Robinhood's markets, even if you lose all your money, you're on the ground, you know?
Now, this comment I do agree with. This does make sense. If, for example, the midterms go a certain direction and certain politicians get into office, like, yes, there is a definite regulatory risk that 400 million goes away like that if the CFTC doesn't classify these as futures contracts. That's when but you can't do anything about that, right? Like, it's something to acknowledge, but it's also like politics are politics.
Yeah, then you went from enjoying revenue, like we wouldn't have seen this growth otherwise.
I mean, Biden banned the Middle East from the diffusion rules back in 2023 from buying AI chips. Trump reversed it. So, I mean, like, this is
SoFi lending.
Yep. Student loan moratorium. Ripped out from underneath them.
Should have bankrupted the company, actually, but didn't.
Noto strong, baby. I saw a comment that someone said they put me last because they know I'm a SoFi agent. I thought that was funny.
Okay, hold on.
Talking with Noto.
Real quick. I just have to see how I said quarter because everyone's saying I said it in a weird way. So hold on. You have to see.
But you just said it now. You say quarter or something like.
Hold on.
Super Boston.
And Shiv, can you guys hear me?
Yes. Hello, sir. How you doing?
Okay. Congrats on a great quarter. Thanks for taking
water.
What did I say, bro? I think I got nervous.
Yes. Hello, sir. How you doing?
Okay. Congrats on a great quarter. Thanks for taking my.
They didn't even put you up on the TV on the side. They really just blacked us out, eh?
Quada?
Yes. Hello, sir. How you doing?
Okay. Congrats on a great quarter. Thanks for taking my.
I don't know how to say words. Someone said it would be wrong if you didn't mispronounce a word. I didn't try to mispronounce quarter. But there you go. Yeah, Tanner, they didn't put you on the screen. I saw you on my Zoom though, but
yeah, no, I was on.
You know,
I mean, without prediction markets, I don't even think the stock would be at $80 right now or 79. I think it would have been lower, a bit lower.
Well, okay, so put in the chat, what do we think happens tomorrow? We think this thing dumps to 75? I mean, look, it's been holding this 78, 79 range pretty strongly after hours, but then again, there's not a lot of volume.
Do we have any inflation data this week?
Oh, that's a good point. So the jobs data tomorrow. Okay, so I don't think this jobs data is going to be that good. And it's for this reason only. Navarro went on Fox today and said we have to recalculate how we think about the jobs data.
Thing I want to note, the jobs report's going to come out tomorrow. Yeah. We have to revise our expectations down significantly for what a monthly job number should look.
They know that shit's gonna tank, bro.
Yeah.
We have to revise. They know it's gonna be so bad, bro. Yeah,
that's like whenever we saw the 2 quarters of decrease in GDP, and they were like, well, it's not a recession. They're like changing what a recession was. This is not a real recession.
Bro, and it makes sense. January had the biggest layoff since 2009. Like, I would expect January to be a crappy month for NFP. So I think it's probably going down tomorrow based on that, but I think the whole market's going to take a little haircut because of that.
I might be jinxing it here, so I'm knocking on wood. But tomorrow, I'll be live in the morning to listen to Shopify's earnings call, and hopefully we make some money. It's one of the greatest companies ever made. So good luck to
Canadian companies.
No. I said companies. We don't have to region base it. It's just one of the greatest companies. And so good luck to all the Shopify holders.
Do you not have any Canadian pride?
Not really.
That's crazy.
I mean, it's so freaking cold up here. It's just every time I walk out of my house, I'm like, God damn it, this freaking sucks. I'm freezing my ass off, scraping my car window. No, I'll see you guys tomorrow.
All right. Well, that's Tanner's YouTube. You can check him out there. Couch, I'm putting his YouTube there as well. Couch, is there a price? I mean, I know you just bought, but are you looking for a price to buy heavier, or you kind of want to see how it plays out?
I mean, if it goes back to 75, 70, I'll be buying. I bought a little bit more today. So, I mean, it's still accumulation mode, so I don't mind. Anything here in low 80s, low 70s, I'll take it. If we go lower, we go lower. I don't know. Again, CPI, I think there is a CPI report this week, I assume. Yeah, Friday. So we'll see what happens with that. The trueflation number seems like we are going much, much lower. But then again, I don't know how accurate their number is. But the trend is we are going lower. Is it enough for the market to start moving back up? I don't know. This earnings season has really been something. Like we've seen amazing reports. Stocks don't move at all. I mean, big tech companies have literally been either flat or down over the past couple of months. So we'll see. We'll see what happens.
All right. Thank you, everybody. I know the stock did not go in the direction we wanted it to, but hopefully we find some level of support around 78, 79. Jobs data tomorrow will be important. And yeah, I mean, the only red flag in this quarter to me was really the cyclicality of the transactional revenues, and hopefully that can be handled as they have other parts of the business that grow. But it's probably, this is not a $20 stock anymore. It's not a $10 billion company anymore. So as the company grows, you're going to have these quarters where they're just quarters, and eventually get those superstar quarters again, but it takes time. And it looks like that's what we have here with Hood.
Yeah. This is not a SaaS company. We're not hoping for just every single quarter is slightly higher in annual recurring revenue. What we're hoping for really is that there's higher lows and higher highs during the volatility, where there's always going to be volatility in this type of name. It's just, can we continue to grow, new members and gold members in retirement and some of the other potentially less volatile aspects of the business.
Agreed. All right. Thank you, everybody. Appreciate it. Tanner will be live tomorrow for Shopify. I'll be live for the market open. We'll see you from there. Bye, everybody. Have a good one.